Seventh floor.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go. Welcome to the nest.
See you on the show.
Bada bing, bada boom. My lovely roll-up army live from the tokenization tower. Happy Freaky Friday to all my freaks out there in the world who love to get freaky with it. It is a beautiful day in the summer paradise of hype above $65. Ladies and gentlemen, we are not messing around here. We held the line. We said we're going to get a sweep under that 60 level. We got the sweep. Now Lighter's up 13%, looks ready for all-time highs. Hype back above 60. Good morning, Rumps. So
W's
underrated
in the
show you guys have.
chat.
W's in the chat. Rumps, welcome to the show, man. Good to have you. We're missing Robbie again, guys. He's in Peru, probably doing ayahuasca. We may never get him back. If Robbie goes to Peru, does ayahuasca, ladies and gentlemen, Freedom Guy, I know you're a big Robbie fan. We may never get him back. So let's hope we get him back. You're watching the Rollup live from the Tokenization Tower, broadcasting from the financial capital of the world in the nest, powered by our friends at Plume, building the most innovative on-chain asset management infrastructure. Visit plume.org to learn more about what they're doing and their Nest Vault product that the studio is named after. We've got a great show for you guys today. Let's get right into it. Welcome to the Tokenization Tower, markets and weather, per usual. Sentora's co-founder, Nest Exchange on Hyperliquid's co-founder is joining. That token's been on an incredible run. Portal Venture founders, head is in the tower as well. We're talking about investing in the age of AI. As always, our topics are powered by our friends at Trezor. Use code ROLLUP10 at trezor.io to grab yourself a hardware wallet. Guys, we're winning. We're up. We're doing well. We held the line. We held the line. That's what matters. We held the line on hype. I mean, people have been calling for 40s, 30s. I mean, I saw some 30s calls on that, but no one's really paying attention to Lighter. And we've been talking about Lighter. It's leading this bounce. I tweeted about it yesterday. It's doing well. Let's get into the markets, into the weather. Before we do, let me tell you about our stablecoin partner, Frax. Building infrastructure for the future of digital money. Open, stable, borderless. Visit frax.com to learn more about what they're doing there. Guys, it's beautiful. It's 73 degrees. It's the end of June. Last year in New York, at the end of June, it was 95. It's beautiful. It's 73, partly cloudy. It's very, very foggy out. So you guys can't really see the tower view today as much, unfortunately. It's quite foggy, but that's all good. That is all good, guys. Because what's not foggy is our portfolios, because we're holding the line. We're reestablishing the trends that need to be reestablished. We're holding the supports that needed to be held. And we need a Bitcoin daily close today above 60K. We need a 60K daily close to get us to where we need to be to complete the sweep and set us up for some more upside, guys. As always, our weather is powered by our friends at Relay. Visit relay.link to learn more about start swapping seamlessly on relay.link. Let's get into the markets. I know that's what we're all here for. Before we do, let me tell you about Denari, building infrastructure for the future of tokenized equities on-chain. Trade SpaceX on Hyperliquid spot using Denari's SpaceXD product. All right, guys, we're green today. I don't have a whole lot for you on these pairs here. Niro, Chainlink, Solana. Solana notably up 10% today. Ansem is trying to single-handedly CTO Solana right now. And honestly, the sentiment around Solana couldn't be any worse. And I can get behind it. Mert also went on their show. He said that his top holdings are Hype, Sol, Near, Bitcoin, and Zcash. Interesting five. I think we're quite aligned there. And I feel like a lot of these guys, a lot of the good traders in the industry, I think, are rallying around the same assets. And that's why today's show is called Return to Fundamentals. We're going to talk deeper about our fundamentals thesis and why that matters to us at this market, at this current juncture in this market. Rocky, what's going on, man? Good to see you there, buddy. Happy Friday. Happy Friday, my guy. What a beautiful day in New York. Went to the World Cup game. So I got tickets to the World Cup game yesterday at 2:30 p.m. By 3:30, I was in a taxi to MetLife.
pull up, and Joey Moose is there behind me. Steve from Pumpcade's behind me. I met the Clipper guy, Jack, as well. He's sitting right behind me. So we're just slamming beers, watching Germany get upset by Ecuador. Then I full send it back to the office, power hour, happy hour, straight to MSG for Rufus concert. Then straight to the bar to watch the end of the USA game. And I've been having this thing where, like, I don't chew my food properly. And so I got these boneless wings. You know, this girl loves boneless wings. And I completely got it stuck in my throat. Last time this happened to me was in Hawaii. I had to go to the ER and I had to get a scope down my throat. I had to go under, and it costed me like $1,200.
Embarrassing.
And this time I was like, you know what? I'm taking sips of water. I mean, I was pulling trig on Houston Street last night for like 10 minutes. It was terrible. And so got it out this morning, woke up, hype's flying, Bitcoin's holding the line, charts look good, lighter looks great, and the boys are up. Another World Cup game on Saturday, so that was my night. It was pretty hectic. That was BS. They let that game go an extra minute. Yeah, that's why the U.S. lost. I know. It was rough. All right, guys, let's get into the news. Before we do, let me tell you about Niro, your home for building, discovering apps on chain. Niro.com is one account, your financial life on chain, no borders. 35 networks, single Niro.com account. Do it private as well. Bruh, just chew your food better. Yeah, I know, buddy. I know. I'm on these Nexium pills. They're like these like anti-acid pills. So I've got my Open Claw, sends me a reminder every day at 6 p.m. Take Nexium before dinner. Take Nexium before dinner. Take Nexium before dinner. So trying to reduce the esophageal inflammation here. All right, guys. Interesting, right? So Paolo and Tether launched this Dream Cash product, right? And it is a hyperliquid HIP3 product. And their thing was, look, we got to bring USDT pairs to hyperliquid. And we're going to build a exchange for it as well. And basically, they're shutting down. And I think there's a couple reasons here. Like, to be honest, I think Trade XYZ is just so dominant that it's nearly impossible to compete with Trade XYZ. Like, it's just not going to happen. So that's one thing. And they argue that in this piece. They argue that basically they came to life with the ambition of bringing millions of new traders on chain. And when they launched, it was this big kind of moment for HIP3. It was this big competition. Everyone was trying to win the race. But of course, Trade XYZ is just so dominant. And now with the deal with Coinbase and Circle, I don't really think there's a chance for Dream Cash to exist. And I think they realize that as well. So you scroll down a bit, they kind of give some of their reasoning here. I don't know if you guys ever traded Dream Cash markets on Hyperliquid, but they were trying to bring USDT pairs to the market. And so they talk about how HIP3 grew, cash markets became a clear number 2, and they're kind of blaming Hyperliquid for not being neutral. They're kind of saying that basically they were second in line always to Trade XYZ. And once the Coinbase Circle deal happened, they realized that they weren't going to really be able to sustain. And so my take here, guys, is that this is the biggest Circle versus Tether win for Circle in the public open markets that we've seen in a long time. Like, this is a significant win in that Circle got Hyperliquid, is the primary trading pair, USDC, and USDT, the largest stablecoin in the world, is going to be sidelined on the fastest growing perpetuals markets, both lighter and hyperliquid. And so USDT obviously has the dominant force in centralized markets, but they will not be the dominant player, is what it looks like in the perps race. Airdrop Alpha, trade XYZ with TradFi for a future trade XYZ token. Trade XYZ is the main HIP3 deployer right now. It is what it is. Honestly, I'm going to fade that. I'm going to say no trade XYZ token comes. I'm going to say it is in their best interest to keep the Hyperliquid token the center of the ecosystem and to not kind of fracture it. So, all right, guys, let's keep it rolling into some more market stuff. I think we have a clip here from Ansem's show, which I think is very aligned with what I have to say right now and what I've been saying to you guys this week. Actually, I don't think it's a video. I think it's just a tweet. So thesis around buying Bitcoin spot is the same here as it always is. Hardest form of money, non-seizable by governments and transferable across borders instantaneously without hassle. Not affected by persistent devaluation of dollars and long-term store of value to preserve wealth. The digital gold thesis took a hit in 2024 and 2025 as gold outperformed during its first real rally, not making new all-time highs since 2011. I believe all that would it take for confidence to return to this thesis would be momentum to the upside. Totally agree. Agree with Tokes on dollar strength and upwards movements in rates dragging down gold, but we are near peak hawkishness as inflation should subside and Strait of Hormuz reopens, blah, 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 blah. I've been very bearish Bitcoin because of Sailor and didn't think 60K would hold at the beginning of June, but I am reacting as buyers stepped in at a key level. Feels like we're currently pricing in the peak worst scenario of him having to sell. Even if he does need to sell Bitcoin, won't have to do for 6 months or more. Buying Bitcoin here into the beginning of Q3 is a good trade setup at long-term historical support, converging with worst sentiment I've seen on the asset. And so, guys, oh my gosh, I am pleased to report I was 50 cents away from getting liquidated on my STRC 5X long, Edward, and you survived. And not only did you survive, Edward, but one of your biggest bags, Lighter, one of the things that we love on the show, that we've just been returning to fundamentals hardcore on, is about to break to all-time highs.
W's in the
So you're cooking, bro. You're cooking. You look great right now. Good shit. So, guys, look, I was saying yesterday that I think we're gonna have a sweep into the lows. We got the sweep. Today's daily close is massively important. I know it seems silly to like over fixate on the daily closes, for example, right? Like just one day, it's not a huge deal. But Hype's daily close yesterday going green was huge on these massive wicks to the downside. And then Bitcoin, we just want to see close above 60 today. Bitcoin closes above 60 today. And we get any sort of weekend rally or early next week rally, I think Ansem's right. And I think that's it for a while. For a while. We'll see. All the quants still think Q4 lows are coming, or late Q3, Q4 lows. But I think for now, I think Ansem's right. Daily close, weekly close above 60 here on Bitcoin, and we're looking really strong. G Lighter. Yes, sir. G Lighter. Return to fundamentals, guys. All right, guys, let's keep it rolling. Before we do, let me tell you about Infinify, building DeFi infrastructure for simpler access to on-chain yield, liquidity, capital allocation, higher yields, no leverage. Visit infinify.xyz to learn more. So, interesting, funny rebuttal on the Hyperliquid thesis from Multicoin. So yesterday, if you guys remember, we walked through the Multicoin paper, right? And we talked about the price of Hyperliquid pushing up to $319 as a target based on an $8 billion recurring revenue on an annual run rate basis. The funny thing here is that Multicoin was always, and Kyle Saman is always preaching about reasoning by analogy often leads to the wrong conclusion. And in this report, this rebuttal from Billy is basically crediting Multicoin's research on Hyperliquid's open interest, liquidation, catalyst, but he argues the report ironically relies on analogy. particularly comparisons with Binance Coin, which is the antithesis to what Multicoin's entire investment and research strategy has been. And so he argues that using Binance's exceptional price performance as a template overlooks the many exchange tokens that failed to follow the same path. And there's a lot of aggressive assumptions here from the paper from Multicoin. And he's basically arguing that valuations based on Coinbase and CME don't make sense. My take on this is, Billy Gao, I think you're going to be wrong. I think there's a technical fractal. I don't know if you guys are fractal boys, if you guys believe in that type of pattern matching, but I saw this insane technical fractal of Hype and BNB token, and it was pretty insane. I wish I could find it. I really wish I could find it because it was insane. So basically what happened is Binance Coin went to 40, back down to 30, back up to like 42, back down to like 32, and then went from 32 to like 150. Hyperliquid just went from 40 to 75, back down to 50, back up to 76, 77, back down to 57, and the next step is 100. So I think there's a technical fractal that I don't know how much credence you'd want to put into. And there's the reasoning by analogy here. And obviously there's the fundamentals. So while I agree with Billy, and I understand that it's ironic for Multicoin to be reasoning by analogy after their entire spokesperson was always arguing that reasoning by analogy often leads to the wrong conclusion, I think there's a technical, a fundamental, and a reasoning by analogy thesis here for Hyperliquid, and I think Billy might be sidelined. Billy might be sidelined. Billy might be sidelined. All right, guys, let's keep it rolling into the next segment. BCG projects tokenized assets could reach $88 trillion by 2035. The future is bright for tokenization. Again, guys, I was telling you yesterday that I was on the panel at Tokenize This in New York here. And I was with Denari, Alpaca, Securitize, and Galaxy. And if we scroll down here, I mean, guys, this market is about to explode. This is the thesis that we've been harping on for Lighter, Hyperliquid, Aerodrome, Uniswap even, Aave, Morpho, who else in the DeFi scape? There's a ton of them. And we've been harping on, if this thesis is correct, if this plays out, right? They're looking at the digital RWA projection in USD, scoping it out to 2035. I mean, man, if this happens, the DeFi protocols we just named and the perp dexes and the on-chain infrastructure and specific blockchains are going to absolutely expand in value, like in a way we haven't seen since 2017. Like, that's how big of an opportunity this is if we get this right. If we get this right and we get the thesis right here, guys, because like the beginning of the thesis here was like HIP3, right? We saw that. That was like, holy shit, we're trading anything on perps on chain. But we're not just gonna trade it on perp. We're gonna trade it in spot. We're gonna lend it. We're gonna collateralize it. We're gonna put it in vaults. We're gonna earn yield on it. We're gonna move it cross chain. We're gonna hold it on blockchains. So this is the long-term bull thesis for the return to fundamentals DeFi plays. And I think that it's the most obvious thesis, but it's also going to take a while to play out. It's going to take a little while to play out. All right, let's keep it rolling. Before we do, let me tell you about LeFi, building infrastructure for the future of cross-chain swaps, bridging, routing across the on-chain economy. For a smoother cross-chain execution, visit Lee.fi or use their Jumper exchange product. Nick Carter here, famously a Bitcoin whale and bull, explains why Ethereum will be a beneficiary of quantum. Interesting. Let's listen to this. It's a couple months old, but I think it's a good post. This is going to get Robbie going, by the way. Robbie's our local in-house big ETH bull. Whack me, Edward says. GMNOC and SM, good to see you, man. All right, let's play the video here.
The fact that Justin is on this paper is also quite telling. I mean, it's night and day. You know, Ethereum, it's basically, you know, in Bitcoin, it's just me worrying about this and like a half dozen other people. In Ethereum, it's already been decided the transition is going to occur. So, I mean, it's just, and the roadmap is, it's like, I was reading the blog on the PQ Ethereum side. I'm like, I could have written this. Like, I completely agree with every word written on here. And I think, you know, Ethereum is also a beneficiary in the sense that it has not gone for this relentless optimization route. So like some of the like high bandwidth or high throughput blockchains have, because they're going to suffer from this. As I said, the fact that Justin is on this paper is also quite telling. I mean, I
think the Bitcoin story, the Bitcoin narrative, like the whole quantum story has been kind of put into collective amnesia as a result of everyone tweaking out about Saylor. But it's still a real narrative overhang for Bitcoin. I don't think it's just going away anytime soon. You know what I mean? I don't think we can just be like, oh, we're all worried about Michael Saylor now, so quantum's solved. Guys, hype's gonna break above 65 on this show, and we're gonna cover it after these first two guests. We've got the co-founder of Sentora, a large-scale institutional DeFi layer. So that last graph that we were just talking about, very much aligned with this conversation coming up. And we also have the Nest exchange. So I don't know if you guys saw, and I'll pull it up after, but the Nest exchange is the main DEX for Hyper EVM, and the token's flying, absolutely flying over the last several months. The worst part about this Bitcoin bear market is not losing money, but knowing Ben Cohen was right. Oh, man. I mean, Ben Cohen is still calling for October lows. So I still think he's probably right. But it's not even like Ben Cohen was right. It was more just like the 4-year cycle believers were right. So we've got Anthony DeMartino in the back, the co-founder, CEO of Sentora. Sentora is an institutional DeFi platform. And they've got a lot of very interesting RWA tokenization offerings. This is the first time on the show, first time for us speaking with Sentora team. Honestly, don't really know that much about what they're doing. So it should be a good conversation with Anthony here, the CEO. Happy Friday, guys. Beautiful, beautiful day out here in New York. Beautiful day in the markets. We're holding the line, and we're going to talk about that tokenization thesis that we keep harping on. Rob and I keep harping on here with Anthony. So why don't we bring Anthony up and we're going to get this show started. Anthony, welcome to the show. Great to have you. Happy Friday, man.
Same to you. Thanks for having me.
Yeah, cheers, man. First time on the show. Great to have you. Just kind of setting some context. We have just been developing this tokenization thesis alongside so many others around just kind of how we think about the second and third order consequences of tokenization as it pertains to value capture with DeFi protocols, blockchains, et cetera. The kind of the bell curve of tokenization, the types of assets that are the most beneficial to tokenize in terms of the core use case of tokenizing assets. And we've just been diving deep here and learning a lot more about this and just honestly more about traditional finance in the last 6 months. And so that's kind of like the context for where we're at. I would just love to understand a bit about your background from HSBC, Barclays. You've done 20 plus years in traditional finance. So bringing that expertise into the DeFi world. How did you found Sentora, and what was the key kind of problem that you were looking to solve based off your extensive knowledge and experience, man? Welcome to the show.
Thanks again. Yeah, I did 22 years of hard time on Wall Street.
Just down there, man.
I had the unique opportunity to run one of the larger Fannie Freddie books from 2007 through 2010. So got to see what the unfolding of a crisis looked like in real terms. And then I kind of moved on later in my career and traded emerging markets. where I started to realize the benefits of Bitcoin and stable coins. When you start to understand that in many countries in the world, their currency is extremely volatile, which restricts investment, which basically leaves people to have very few places to store value or generate wealth. I mean, I think some of the starkest examples are in Latin America, where houses above a certain size trade in dollars. And some of those countries like Argentina have had capital controls, like excluding their population from dollars for the last 7 years. So that's kind of where the use case really came to be for me. Moving on, I started at Coinbase after I left my career at Wall Street, built a DeFi and derivative trading team, so had a phenomenal experience there. It was like a graduate program because Coinbase had the expert in almost every field that you wanted to learn something about. So it was a really good kind of post-grad program there. And then I started a company called Trident that was focused on DeFi lending. And then we merged with a company called Into the Block to form Sentora last April.
Yeah.
So I think.
Yeah, I remember Into the Block.
Yeah, so so Sentora Trident had become like an advisory firm for stablecoin issuers and chains, helped them grow their TVL. And then Into the Block was like a non-custodial asset manager. So the high-level theme for the merger was my clients have money to buy TVL, and their clients have TVL looking for a yield. So that was kind of the non-sophisticated way to say it, but the synergy was very clear. And then since then, we've become one of the top curators, which we hadn't done prior to that. We launched multiple earn programs, the key one being Kraken Earn. So the Bitcoin yield and the stablecoin yield is all run by Sentora. And we are about to premiere a new RWA that we worked on with a tokenization agent and a top 5 asset manager.
Wow. So before we get into kind of like the deal and the earn product and what's happening there, I just want to kind of understand exactly how Sentora works from a kind of like a product perspective. And so you guys are operating risk managed earn programs, Morpho Vault curation, and effectively bringing kind of yield strategies on chain to fintechs, neobanks, et cetera, and enterprises at large. So you guys are almost like, you guys are almost like a yield provider at institutional scale with institutional grade risk management and understanding of on-chain strategies. And you guys are operating in the lens of like B2B into neobanks, exchanges like Kraken, anyone who offers earn-like programs, and then thus kind of like B2B to C by their consumers leveraging Sentora's strategies. And your main business is getting deposits into your risk managed products and earning a spread or earning like a curation fee, like a kind of like a manager fee almost. And your goal here is just scale the amount of integrations on the B2B side to get deposits from their consumers directly into Sentora managed vaults or products. And that's kind of like the number one MO for you guys right now.
Yeah, and I would say that's perfectly described with our execution plan, but I would take a second to explain the vision. So we think that, and we're going to produce a paper in the next few days on this, but we think that there's the largest wealth transfer in history. And there's so many different articles written about, well, what is the younger generation going to buy? You see this activity of a lot more retail activity in the equity markets, people reaching out the risk curve for private investments, but they don't think about how people are going to physically handle their money in the future. And being probably one of the oldest guys in the industry, I have teenage kids, and their bank accounts are going to be Venmo with a debit card. Yeah. They're never going to walk into a bank. So our vision is that banking is going to change materially, and this kind of fintech payments, remittance boom is all going to evolve into the next level of banking, where the value that the banks extract is going to be redistributed to the providers, the enterprise clients, and the users themselves. So these earn programs are really to build a on-chain wallet bank account substitute that instead of earning 40 bips in treasuries in a checking account can earn 4 to 6% in a DeFi yield strategy that allows them access to their money 24/7, 365. Right? So that's, and then on the other side of that, as that builds, it's going to grow into a credit engine that allows users like Deal, which is an earn program we won, who are typically long cash, the ability to lend to someone like a Western Union that has to borrow dollars to settle payments because ACH is really slow. So we're basically trying to build not a neobank, but the new infrastructure for how banking will be in the future, and Earn is the first part of the execution.
Yeah, got it. And when it comes to thinking about the kind of generational shift here that you describe, I like don't really hold any money in a savings account, really, right? Like my savings account is on like a Robinhood-esque or a even like a brokerage account or in USDC in an exchange or just on chain in general. And this kind of generational shift, like I'm curious a bit more about like entrepreneurship and building businesses is quite path dependent, right? Like there's events that happen externally and there's events that happen internally, and that kind of sets the stage for who the winners and losers are. How do you think about the larger kind of like macro tailwinds behind this shift towards more yield, on-chain yield, bringing that into users, the shift away from banks towards stable coins, towards like kind of like this analog to digital shift? Like just kind of broadly, before we get into the nuances of the product, like what is the kind of outsized macro thesis that you have that is like propelling Sentora's broader product strategy?
So if you think about what a bank account is to you, like really what do you use your bank account for? For me, it's I take in my paycheck and I pay my bills. And any money that doesn't cover that float is either invested through a brokerage account or invested through crypto exchanges like Kraken. Like there is no idle funds that I leave in a checking account. Now, what I expect and what I've already been seeing is more and more of these kind of fintech neobank providers like a PayPal are starting to engage in getting payroll into your Venmo PayPal wallet.
Yeah.
And then as they expand merchant pay, you can pay your bills through the wallet. So then what do you really need a bank for? I mean, at the end of the day, my generation still uses some cash. I mean, I really only use cash to go to a casino. There's really, even like people that do odd jobs around the house take Venmo. So there really is the physical need of cash. And so so that's the base. And what's the catalyst? There's $124 trillion of wealth transferring in the next 20 years to people of my parents' generation, to people in my kids' generation. And everything they consume, whether it's financial or information, is on this, right? Yeah. So if it doesn't fit on this, it's not going to get used. I'm actually, as a trader, I have a strong bias to never trade on my phone, but the amount of people who actually trade on their phones or make investment decisions on their phones, to me sounds crazy, but like, it's only crazy when two people do it. When half the population does it, then then it becomes a trend. So it's really about wealth transfer to people who use and manage money differently, right? My parents still have envelopes for cash for certain bills, right? Yeah. I think they still have some traveler's checks if people on this phone even know what this is. But my point is that people are just going to use money differently, and the services that are scaling. I mean, look at neobanks like Chime, how fast they scale. Look at debit card issuers like Rain. There's pure demand. These aren't things that are raising a ton of money on speculation. They're raising money on numbers, on users, on engagement. Like this isn't a fad. This is just how people are going to use money in the future.
Yeah. So in today's world, then, looking at Sentora's products, we can go on Kraken, and you said like the Bitcoin strategies there are managed by Sentora. There's other kind of like vaults on Morpho, and so for the listeners here, they're gonna want to know, all right, like I hold ETH, or I hold Bitcoin on Ethereum, I hold Hyperliquid, I hold other tokens, I want to, get yield on stablecoins, like. When you're looking at like the holistic offering, are you guys focused on depth of like a specific strategy, maximizing the efficiency and alpha generation in a specific strategy? Is it kind of like breadth of here's as many kind of types of products for risk, for assets, for global users? Like, what is kind of the product strategy for you guys to optimize the most amount of deposits to generate the most amount of alpha? How do you kind of think about that?
So we think about dollars first, and dollars is the biggest asset class, and then we think about Bitcoin. And probably the next one is XRP. And the dollars are basically where the stablecoins are basically what the global economy is going to run on in the future. If you listen to Scott Bessent, the Treasury Secretary, I mean, he's very clear that he's driving stablecoin adoption because there's a lot of benefits to the U.S. government. One, diversifying buyers of their treasuries away from countries we might tariff from one day to the next, and the other is, most of global trade happens in dollars anyway, so we need to have a dollar that meets the times, right? So that's where the stablecoin, so that's a pretty strong narrative that I think is pretty bipartisan. So that's going to have constant tailwinds. As far as thinking about strategies, I think about where the banks step in and max extract from the user. So a checking account is the best definition of max extraction, right? Now, if you think of that's why we focus on dollars, and I can go a long time about like how that has to change. But so yields are so how do we look at the strategies? We have a risk council that sets the parameters for each vault. So when we went to Kraken, they wanted yields above 5%, but they didn't want to take on depegging risk. They didn't want to take on RWAs that were too volatile in price. So typically for every client, we create a prospectus as if you're buying an ETF. We basically agree with the partner, here's the parameters, here's the assets, here's the protocols, here's the amount of leverage, here's the amount of duration we'll take, how quickly the money can move in and out of the vaults. And then we have a heavily built out AI strategy. So we have one AI agent that identifies opportunities across multiple chains, and that runs at will, but usually we get a batch run in the morning and the afternoon. And then we run another agent that tries to pick holes in the risk strategies, like where can these strategies hurt? What are the most biggest drawdowns? And then finally, when all the data is prepared, we make a decision, and then our smart contracts auto-execute. So it's very similar to how a asset management firm would work, but using smart contracts and AI agents to make it much more efficient, because you have to make the risk decision 24/7, 365, right? Crypto doesn't get a long weekend next weekend because it's U.S. Independence Day. Yeah. So we need these tools that work faster than we do. And at the end of the day, our goal, whether we're a vault curator or a strategy manager, is return of client capital. It's return of capital before return on capital. Yep. Right? And that's what we've lived by for the last 5 years, and knock on wood, that's worked out for us. But I do want to address one thing. Yeah. Vaults, like Morpho-style vaults, are a fantastic piece of infrastructure. They are not earn programs. They are modular lending protocols that generate a yield. But the constraint, they struggle to generate a high enough yield to be on their own be an earn program, because the yield generally comes from, and if you look at Morpho, I think 78% is simple Bitcoin ETH versus stable vaults. Even though there's thousands of assets on there, the vast majority is Bitcoin ETH stables. And the vast majority of those are programs that are sponsored by exchanges to run Bitcoin borrow programs like Coinbase, right? So you think about how much you're willing to borrow Bitcoin at what high a yield, and then subtract 200 basis points, and that's the supply side. So if you're borrowing at 5, the yield is 3. I mean, 50 bips in either direction. So those aren't 3%, at least now, when you could still buy a money market fund for almost 4%, is not good enough. So over time, maybe that'll become good enough, but for now, you need to do things that generate a higher yield, and that's taking on leverage, looping, and arbitraging rate differentials between protocols. That's the primary strategies. Everything's run inside of a day duration, and most of it can be unwound block by block. But so what we do is run the strategies that interact with a vault. So a vault could have Athena and Maple assets in it. We are the strategy manager actually loops those positions. So that's the difference. I think too many people misunderstand as a curator. Curator is like the simplest form of yield generation to actually run a strategy. That's where we really, so we do vault curation because we identified some gaps in the risk processes of other curators at the time, and we just wanted to have the vault set up in the way we wanted them configured. But that business doesn't make a lot of money. That's not a, I know that gets reported on DeFi Llama who's the top 1, 2, 3, but that is completely insignificant for us. It's really about, we need to host those vaults so that we can run strategies on top of them.
Yeah, Greg here in the comments says that's something that I'm interested in, displacing Fidelity as my asset manager with AI agents, or perhaps some sort of just like general on-chain strategy. Obviously this is like still human oriented and human ran, AI agents to scrape for opportunities, and then a separate one to scrape for risk. We're definitely entering this like agentic finance world. People are excited about it. I think there's still like a lot of trust gaps and a lot of guardrails, and these things will need to kind of come to fruition, but we're still kind of working on that. On the Earn Vault side, so one thing that I've been kind of like pontificating on is like, all right, so we're gonna have a lot of stablecoin growth, a lot of neobank growth, a lot of RWA and tokenized asset growth. And then you're gonna be using Morpho, you're gonna be using Maple assets, Athena assets, Aave, Aerodrome, there's perps here. There's a lot of these like kind of like underpinning protocols that are powering Sentora's strategies and the entire business that you're running. And so like I've been trying to just understand, like, if we are going to tokenize, let's just call it, there's a couple $100 trillion of assets out there that I think are tokenizable over the next decade or two. Let's just call it like a mere 20 trillion over the next 5-10 years. That is going to be a significant amount, and that is currently 5-10x the amount of the total existing crypto market cap. And so when you think about these DeFi protocols, businesses like Sentora, you stop thinking about these businesses as relatable for the $160 billion of TVL and DeFi and the $3 to $4 trillion of total crypto market cap. You start to think about these things as like asset managers for taking bips of the total global asset population or size. And so when you think about this kind of like what's coming, I'm just curious from like maybe more from an investor mindset or from a CEO mindset of like where you place your energy, resources, bets, or from an investor perspective, where you allocate capital. How do you think about the biggest winners in this next 5 years based on this thesis being accurate? If this thesis is accurate, who wins the most? Where do investors allocate capital to? Is it the blockchain's underpinning? Is it DeFi apps? Is it specific protocols? Is it a specific infrastructure? And then on a business side, how do you best kind of like position to gain a large amount of that ever-growing pie? So maybe there's kind of two questions here from the business and entrepreneur perspective, from the investor perspective. If the tokenization thesis is correct, trillions of dollars of assets are coming on chain. Who wins? How to position to win here?
So I'll tell you who loses is banks and asset managers that package products because people aren't willing to do the work, right? They either don't have the skill set or the knowledge or the time or the patience, right? Like older generations still pick up a phone to buy a stock, right? And they're happy to pay $27 when they can just go to their account, click a button and get it for free, right? So these enablers is what blockchain and AI are going to change, right? We've had records amounts of retail users buying stock, doing the work. It's a little easy when you're in a rally, but let's see if they stick around in the bear market. But in general, people are taking their finances into their own hands, and these tools are just going to enable that. So the big losers are the people who do it for you. So I don't want to just become an on-chain version of someone who does it for you. I want to contribute to the infrastructure that people are going to use. And what that's all going to end up doing is take a lot of rent takers out of the market, which all the benefits, the winners are going to be the users of these products. I mean, think of it, I'll give you a simple, and I wish hopefully my cloud update's fast enough. You think about the investable universe. So if you take individual stocks out, because most of their money's in some type of managed ETF or strategy, and then they play around with stocks as like their side DraftKings account when there's no sporting events on, right? So if you think about how many people are actively managing your money, it's quite a small number since ETFs and passive vehicles have been created. So the amount of money that's actually being managed is only going in one direction, right? So having a parameter-based AI agent that you just, what does an asset manager do when you speak to them, or a personal wealth manager? They ask you what your risk profile is. They ask your ability to sustain loss. They ask what your cash flow looks like. That's just a model driven. It's just a human asking you, but it's a model. So what is it that hard to think that you type that into a AI interface, stick within the regulations of the country and acquire the assets on your behalf? I mean, it doesn't seem that far-fetched now. Maybe it did a year ago. But what are these professionals actually offering you, and these institutions actually offering you?
Yeah, so then let me frame this a little bit differently. So in the current market, you could say that the market makers of these kind of like of tokenized securities, specifically, Citadel and Jump or whoever, right? The large ones, they make a ton of money off this current system, off this middleman, off this trading. They're like huge winners. And obviously, like the big banks, right? Like JP Morgan, Chase, Fidelity, all these banks make a ton of money off the existence of the current system. So like maybe a corollary here is like, who is the winners of this then the market makers in digital assets and on chain who are going to be doing, like, is it the Jump and the Wintermute who are going to be, settling these markets, these RWAs, these tokenized equities on chain? And then, I don't know who the banks are on chain to think about it, but like, help me kind of wrap my head around this part.
Yeah, so think of the banks as an access point to market liquidity. So the banks are the way you buy an ETF or an asset manager like a Schwab or a Morgan Stanley, is the way you get access to the market, right? Those guys are going to be minimized quite materially. Now, where I think in the current participants in the market who benefit is you're always going to need people to provide liquidity to keep prices tight. So where the Jumps and the Citadels make a lot of their money is not speculating on the direction. It's about constantly arbitraging micro price movements so that people have liquidity at very tight prices. Right now, what they get paid for it versus the value they add to the market is debatable, and it's you have a very strong view depending on which side you stand on.
Yeah.
But they provide a real service that doesn't just get automated away. And to be fair, it's all automated anyway, but it's under their wrapper. Right? So the question ends up becoming is, as the wrappers disappear and the underlying tech gets accessible by the individual users, that's how I see the market unfolding. So you may not interact with a name again 10 years from now. It's just a portal where you describe what you want and it shows up in how it would trade you custody, which now will be wallets instead of 25-page documents you have to sign and mail back to the brokerage house.
Yeah. The system from buying a stock to actually where that stock settles, there's just a slew of middlemen in between. Mm-hmm. Anything from a clearinghouse to the broker dealers to DTCC to the brokerage itself to the custody provider to the stock certificate owner. It's just this entire slew of middlemen in between, specifically on tokenized securities here. And whatever value that is, where that value gets ported when those middlemen are removed it's just kind of like what I'm trying to mold and figure out here. So,
that friction is typically created by two things. So one is technology, and the second is regulation. Now, technology at a big bank or a big asset manager is extremely expensive to upgrade. And the banking system and the asset management systems are very integrated. So there's certain benefits you get if you individually upgrade, but if the system upgrades, everyone gets the benefits, but that doesn't necessarily always accrue to the person spending the money to upgrade. So this is why you kind of get this deadlock where, like, I need a monumental move forward to want to spend that kind of money, and I'll just keep using old system and patch them together.
Right.
The regulation, you could be a skeptic, but I've seen it in action. The regulation is really just a backwards way of the banks putting a tax that they can, and I'm talking very broadly. I think a lot of parts of Dodd-Frank were really good for investor protections and taking a lot of leverage out of the banks and pushing them into private credit, and by definition, people who can take losses, then socializing with a guy who puts $50 in their deposit in a bank account, right? Yeah. So I think that's helpful. But I mean, I talk to fintechs all day long who most fintechs, when they move money from one place to another, and it's like, woo, magic, it moved in 2 seconds. What you're not seeing is when XYZ remittance company, you deposit in New York and it shows up in Mexico 12 seconds later. That's not technology. That's the bank. That's the remittance guy going out to a bank, taking a loan, and then wiring the money to the other location. Right, so you see it instantaneously, but then the bank the remittance company is still waiting 3 days for HCH to settle, and that's why you pay 7% on a remittance. So, but we have stable coins, and we've had stable coins for 8 or 9 or 10 years, and we've had blockchain. So why aren't we doing this already? So that's one. The other thing, the regulation, a lot of it is built because the old system, who owns the stock, where is it, is because the ledgers are hidden. Once you put that all on chain, you can track everything, right? But you can track, like some of the largest fraud or moving illicit funds has happened in banks, right? HSBC took a $7 billion fine 15 years ago for funding Iranian terrorists, or in Mexico for drug dealers, because the way the traditional money system and why it takes so long is basically they put all these hops in between so they can just verify at each hop that it's the same user's money. But as you go through enough hops, you start to lose where the original hop came from. But on chain, you could see it, anybody can see it. So these innovations, I'm a bit frustrated haven't been implemented already, but I understand why.
Yeah, interesting. Man, last thing for me, Anthony, on Sentora specifically is what material changes to your business will Clarity Act passing create?
For our business, I think it'll just unleash a lot of pent-up demand where, we've worked with a ton of clients. So there's 2 big blockers to this kind of like the levee breaking and just having a flood of these. One is Clarity Act coming through. And we speak to a lot of fintechs. Their 2 biggest hangups is Clarity Act. And then the other one is DeFi's scary. I don't really understand it. While the yields are attractive, I'm afraid if I promote a product that gets exploited, I lose my client's money, I lose trust, and it's game over. And that's why we incubated a company called Firelight, which is going to be the first scalable on-chain insurance. It launches next month, and we just closed our first close of our seed round this week. So Firelight's going to start insuring vaults, potentially on Kraken. We're looking to insure staking risk, restaking risks. So things where and it's a very simple structure. Anyone who purchases this cover has collateral sitting in a box next to their capital. So if anything ever happens, the collateral's sold, and the claim is remediated in less than 10 days. So I think insurance is probably the biggest thing I'm excited about, along the things that, because I think that's going to be the piece that gives the fintech, Web 2 users peace of mind to really start moving at scale.
Love it. Love it. Regulation and insurance, 2 things that a lot of these industries have had for a long time that DeFi has kind of just struggled on. So, absolutely. Anthony, have a great weekend, man. Thanks for spending some time with us. Great to have you on for the first time. Would love to have you back. I'm sure I'll see you at some of the conferences in New York or at any of these kind of like tokenization RWA ones. Great weekend. Go. I don't know who your World Cup team is. Maybe it's the U.S.
It's the U.S., but yeah. Good luck. Have a great weekend.
Cheers, Anthony. Peace, man.
Bye.
Alrighty, guys. That is Sentora. That is the Earn Economy. That is Anthony playing with poker chips that I knew you guys heard. What's going on, Eyeball? Good to hear you. Hey, Freedom Guy, we know, bro. If you can't beat them, join them. See what they're doing. Position yourself accordingly. You're too emotional. This is finance, not civics. We got to fight in the Rollup army. Freedom Guy versus Greg. The boys are fighting. We got Edward fighting on another person who was short stretch. I wonder if they closed that short. Greg, the fiat banker. I appreciate your concern, but I know what I'm doing. Good work, Anthony. The Rollup army, there's no need to fight, guys. Hype's at 64.75. Bitcoin needs to close this daily above 60. I don't know who the 60K seller is. Whoever the 60K seller is, I'm coming for you. I'm coming for you, buddy. All right, guys, we've got Telaga, the founder of Nest, a pretty prominent DEX on Hyperliquid EVM, Hyper EVM. This guy's a major hype bull. So very aligned with the show, with the channel, as you guys may assume by now. And we're going to be talking about what they're building with Nest, the product. Like I said, the token was flying. Like, if I could pull the token up on Deck Screener, it's been cooking. Absolutely cooking. Let me just check it out right now. Nest Exchange. I'll have to find it, guys. But we're going to get Anthony up, and we're going to talk to him. Here we go. Nest W Hype. Gecko Terminal. Oh, I haven't seen CoinGecko's terminal before. This is pretty cool. All right, so they got hit down a little bit following the Hyperliquid pullback. That kind of like mimics Hyperliquid on like a super high beta vibe. It's $3 million market cap, trading at a penny and a half right now. All-time high at 4.5 cents. It was trading at less than a tenth of a penny in April. So this thing's up like 15x in, I don't even know, like 2 months. Obviously very small cap, so the whales in the chat not going to be able to ape in size. But passion, it's passion, NOCSM says. I'm going to buy some more lighter today at some point. Yeah, I mean, I feel like yesterday was the play. It's up 12% today. But, I mean, if it closes here on the daily anywhere above 1.8, it's one of the strongest daily closes we've ever had on lighter. It would be a new all-time high in daily closes. And the previous all-time high is basically $2. So we're very close to blue skies there. But we're not talking lighter. We're talking Hyperliquid. Let's get Telaga up, the founder of Nest. Telaga, welcome to the show. Congrats on the success of Nest as of late. How you doing, man?
Very good, very good. Thank you for having me on, and appreciate you dedicating the show to us. It's really nice to see.
Great, man. Of course, man. Always, man. I was just talking to the audience here about what you guys are building. You have a crazy background, a former United Kingdom PhD cancer researcher who transitioned into crypto during the pandemic. You're the co-founder behind Nest Exchange, a meta DEX, offering very interesting liquidity opportunities for trading on Hyper EVM. Man, you got to tell us your story about Hyperliquid. What's your Hyperliquid story?
Yeah, my Hyperliquid story started perhaps a little bit later, than everyone else. Been in crypto, I guess, since towards the end of 21. So like you said, I was a cancer researcher working here in the UK, and discovered, the bull run during COVID. We all got sent home, and we were getting paid our salaries. We had this thing called furlough, and we're like, I was with my girlfriend. I was like, what can we do, with this money coming in? And discovered the blockchain, and was looking around. Things like ADA and ETH were up massively, over time. And I thought, if I just put money in 3 months ago, I would have been able to pay for our traveling plans. So then, we were playing around with it a bit, looking at crypto YouTubers making absolutely no money, getting dumped on for about a year. And then sort of really dug into crypto when Andre Cronje released the V33 primitive. And I thought, I'm just going to get on the technical side here, really understand what's going on, and absolutely, was taken away by the model. Obviously, it wasn't successful, but I could really see the benefit of, systems that are distributing 100% of revenue that they generate to token holders and into the economy. That's what really attracted me into crypto, was building these financial systems that can make the world sort of better. I was thinking, even just for savings in the UK, you get like 1 or 2%, even if that, right?
Yeah.
What if everyone was getting 5 to 6%? How much better off would everyone be? People would have a lot better time sort of going on. Long story short, I kind of messaged my now co-founder Satsi, who was working on a protocol at the time. And I then went traveling, and I was, look, I know a lot about V33. I can write some tweets, and I just did that for a bit. Then sort of his sort of project came to a close, and we thought, let's launch our own. Started out on Blast with a V33 called Phoenix. And Blast was really fun at the start, but unfortunately, the whole thing got closed off, and I think pivoted to sort of a mobile app. But what we really nailed down on as a team was really thinking about incentives and what users want, and looking at what the economic activity of a chain is, and sort of directing that into a positive sum system. And that really brings us to Nest and Hyperliquid. I think looking at Hyperliquid, it's kind of like the holy grail that DeFi has been looking for this whole time. You saw GMX, DYDX, and then kind of maybe good timing after sort of FTX. People were looking for the next alternative, something that they're not going to take all your funds and that kind of stuff. And I think two things came to fruition really for Hyperliquid. It was building a great UX, working hard on the product, make sure it works really well, but also that incentives mechanism where I think now it's 99% of protocol fees go towards buying Hype, and it's this direct feedback loop that has allowed Hype to grow to significant proportions. But you've got to start with building something that users actually want, right? You give 100% of value, but if no one wants to use your product, then you're going to go nowhere in the first place. And that was kind of the challenge that we had on Nest. I think to your question, what attracted us to the chain was our experience sort of on Blast was that there's very much chosen protocols that come along to the chain, and it's hard to compete against that if you're not part of the sort of initial cohort. But Hyperliquid and the team and the values that they have, it's kind of a meritocratic system, right? You can come in, build your project, acquire your users. We might retweet you, we might not, but there's no sort of preferential treatment. And I thought that sort of really aligned with our values of wanting to work on something, and if we do well, things may pay off. And so that brought us to the chain in the first place. We could see really the EVM layer doing really well, considering that Hyperliquid's bringing a lot of users, taking users away from centralized exchanges. I think there is always a subset of people that will want to come onto an EVM layer to do sort of EVM finance, right? Trade tokens, provide liquidity, borrow and lend. And, I think that layer is going to really sort of benefit as Hyperliquid grows over time. But I know I've been going on for a bit here, and I can perhaps dig into, how we built Nest and why we built it. But I think that the sort of meritocratic playground and the fact that, Hyperliquid is this exchange that, is transforming the sort of perpetual futures and spot trading experience is really what attracted us to the ecosystem in the first place.
Yeah, man. And so the Nest token has been on an absolute run for the last 3-4 months. Maybe you could just explain to us kind of like what the Nest bull thesis is here. Why should the people listening in the community consider this? Is it like a Hype beta play? How does the mechanism work? And kind of the liquidity mechanism on Hyper EVM, and just kind of give us an understanding of like what just happened.
Yeah. So perhaps I'll go to the start and go through the sort of thought process that we went through, when we were trying to launch Nest. And I think what we call it, it's a decentralized exchange that is structurally aligned with Hype, sort of deep into the protocol core. And what we were seeing, and we were asking ourselves the question, right? We launch a token on Hyper EVM. What would we do? What would everyone else do? And the answer is you're probably going to sell that token to buy Hype, because Hype has so much demand. It has the assistance fund. I think it's bought $1 billion of Hype every year. It's a significant economic value chain that is roaring. It's been talked about in CNBC. DATs are buying it, right? Who are you to launch a token and expect people to buy it over that? So that's kind of a blessing and curse of being on Hyper EVM, is that you have this amazing ecosystem with thousands of users who have been king-made by the airdrop, right? And they're loyal and they love the chain, but at the same time, you're competing against what everyone loves the most. So the answer was, we have to find a way to bring that together into the system and to give users what they want, which is, more Hype exposure. And in our case, as a decentralized exchange, access to the economic activity, the fees that can be generated on the Hyper EVM, which are separate to Hypercore. And we landed on the VE33 model, which importantly gives 100% of fees to token holders. And what happens in these sort of V33 systems is, people lock a token and then they vote to earn the fees from the protocol.
Yep.
What a lot of protocols do is they allocate a lot of VE tokens, lock tokens at the start to specific things, whether it's the team, different kind of incentive structures. It's roughly around 50 to 70% of the initial supply. Instead of airdropping all of that to everyone else, we decided to do something very different, which is to build specific incentive mechanisms for the DEX that captures fees on the DEX, but gives that back to users in a way that we think users want, but also is positive sum for the entire exchange. So that's called the Hype Engine on Nest.
Yeah.
And what that basically enables is if you, engage with the protocol, you LP, for example, you lock the Nest rewards that you receive. Not only then can you earn the fees from the platform, but that sort of bucket of that initial supply, which on other exchanges you're competing against, here that bucket is working for you. So you get the voting API that you can get on any other exchange, but then every week you get this hype bonus if you deposit your lock in the sort of Hype Engine system. And that, I think, was the key thing that we really nailed down was the incentive structure, because if you're LP on Hype EVM, you have hype, you love hype, right? You're going to LP hype. Wow, I can LP, lock those rewards, and earn more hype on top of that. And the same goes for any other users. And I think our lock bonuses have been around 1,000% annualized at the moment, because we're on this growth trajectory. That also means, that there's a lot of sort of arbitrage, LVR on the chain, and permanent loss, everything that goes with LPing. And that, I think, is helping to offset. And, we've really built this for the hype degens, the hype bulls like us. We're bullish hype. And in effect, to sort of close out, what that enables us to do is, if Nest is the dominant exchange on Hype EVM, we're capturing all the fees that are generated by the trading volume on the network. And your lock will capture that. But then we're also able to transform some of that into hype, giving you a bigger share of rewards than you can get anywhere else in, what is the sort of fastest growing and most exciting token in crypto at the moment.
Yeah, exactly. And so, I think you kind of outlined a really good, it was really nice to hear that you have like the awareness and like product understanding to think like, okay, people are already buying hype over most other tokens in the market. Why is ours different? Well, we have to kind of tie this deeply into it to make it kind of like that investable. And then if you look at not to fixate on the chart, it's obviously a very small market cap token, but like it mimics a lot of the price action of hype, just kind of far more volatile. And so, when these DATs are buying hype, for example, their whole concept is like maximizing hype per share. Sailor's trying to maximize his Bitcoin per share. David Shamus and Bob Diamond are trying to maximize their hype per share. It's all about maximizing hype per share. Is there a way to think about Nest in a similar fashion as you've just described, in like a maximizing hype per pool, per token? How do we think about the value of like getting kind of indirect hype exposure by using Nest, by locking, or by holding the token?
Place, but Hyperliquid strategies of, I think, and Hyperion as well, have been doing a great job of stewarding the ecosystem in the capital markets, and Hyperion really engaging with DeFi, which I think is really exciting, and I really do love seeing that. And we've had conversations with them as well, and really nice team. Hype per share, I suppose we have different token supply dynamics. That's not really what we're optimizing for per se. What we do have is the bucket of fees that are generated on the DEX, and also the trajectory that we believe the exchange is on, and also where the ecosystem is going to be going over time. And like you were saying a little bit earlier, Nest is perhaps you can consider it beta, not financial advice. Do your own research, don't believe anything that people say. Really think for yourself. But, we paired the token with hype because we're bullish on Hyperliquid. And I think if hype goes up over time, naturally Nest should follow the same trajectory. I think what we're looking at really is that the bucket of fees on Hyper EVM are going to continue to grow. And what that will enable our users to do is to convert that economic, volume, that trading activity into more hype. and the DEX is able to do that for you in an automatic basis. So it's really easy, right? You lock, you deposit it into an automated voter, it collects fees, and then you collect your hype every week. It's been interesting to see people posting their sort of P&L charts on Twitter. You know, it's nice to have a community engaged and really believing in what you're doing. You know, to sort of fluff us up a little bit, you know, I think Nest is now the fourth largest DEX across DeFi in terms of token holder revenue over the last 30 days, maybe 50 days. I think DeFi Llama really did us a solid by putting out the tweet, I think earlier today, showing that her sort of quarter on quarter above certain sort of thresholds, Nest has, you know, generated the most revenue sort of over time over the last quarter. But that's really, you know, what we're able to do here is to capture the activity on the chain. And as a proportion of the pie compared to all other DEXs, Nest will deliver you more and more hype. So to your sort of hype per share point, you know, if you're an LP and you're sort of continuously locking the token and the exchange is growing, you know, your lock will capture more and more hype over time, which for you, fantastic. You know, you're sort of growing, you know, your underlying.
Okay, and so this hype engine, is this held in the treasury of Nest?
Correct. It's a VE NFT, so a VE Nest position.
Okay.
So that was, you know, 40% of the initial supply, and it sort of votes optimally, sort of automatically, you know, through an algorithm, collects the fees, converts them into hype, and distributes that to users who lock Nest on the exchange.
Okay, so you can lock VE Nest for, is it similar to like, is it 1 month, 6 months, 1 year, 2 year, 4 year, or is it longer term?
Yeah, you up to 6 months is how we set it. Typically, you know, like Aero's 4 years. We wanted a little bit of a shorter lock period for some particular reasons. We think that has some advantages, but that's the sort of number.
Got it. Yeah, because I'm going to pull this up on the screen here, and I just see people tweeting like, okay, so for example, you guys just tweeted another 250,000 Nest available for liquidity providers this week. Quick epoch recap from Satsy here, but I'm just trying to find 44 single epoch bonus paid in hype. Lock Nest, deposit in the hype engine vault. Okay, so you buy Nest, you lock it in the hype engine vault, and then you earn yield in hype tokens every epoch.
Correct. Every week you get a drop.
And the yields right now look ridiculous. Like, how is this sustainable?
Yeah, it's a good question. I mean,
well, like, where does that come from as well?
Yeah, so you know, the yield comes from the overall sort of fees that the exchange, you know, is generating. So you know, I think the first phase we're in right now is a bootstrap phase for the exchange. I think, you know, we've been growing massively. You know, the emissions value is at a good level. It's been encouraging a lot of growth, which has been great to see, and that's sort of achieving what we've wanted to have, which is TVL coming in and TVL continuing to grow. But that locking APR is simply a function of the fees generated on the exchange. You can lock and put it into the Hype Engine vault, or you can lock and vote by yourself. So right now, roughly 50% of people are voting manually, just collecting fees. You know, whether you want to vote on the Kinetic pool to get Kinetic fees, you know, you can do that. The other 50% are in the Hype Engine vault, which votes automatically for you, compounds that back into Nest, and then delivers you a hype bonus every week. So, you know, in terms of whether the APRs will remain that high, that depends on whether more people jump into the Hype Engine vault, right? It's going to bring it down because it's going to be shared across more people. But there's just so much trading activity on Hyper EVM, and the TVL I think we have is very productive. So it's just generating a lot of fees. And to sort of my point earlier, in terms of how the exchange is structured from its tokenomics, the vast majority of the initial supply was dedicated towards this Hype Engine reward system. So I think what users are seeing is they're just capturing much more value from the exchange than they would anywhere else. And that's why also the APRs are high.
Wow. Llama AI found 12 all 4 criteria, grew TVL, grew revenue, over 5 mil, over 500K in revenue. And your revenue just comes from trading fees.
Correct.
Got it.
Yeah, trading fees and protocols who, come onto the platform can also deposit incentives, but right now it's a majority of trading fees.
And so how much hype have you guys accumulated in the hype engine?
So when we first launched, it wasn't all sort of roses and lovely. We had a really hard start. It was just after 1010.
Okay.
And for about 20 epochs, we accumulated hype, and that was towards the epoch 20, that was $200,000 of hype. And so what we decided to do is to switch this into sort of a weekly distribution.
Yeah.
And, in the last 10 epochs, we've sort of generated around $400,000 of hype. So roughly annualized, it would be, as it currently stands, between $1 and $2 million of hype. But,
wow.
That's just been accelerating as we've been going along. So it's
nice.
we call it the biggest airdrop in Hyper EVM history. So hopefully that keeps on going. And it also mirrors, right, Hyperliquid and using fees to buy back hype to bring more structural buy pressure to the token itself. And I think that gives hype bulls a reason to come onto Nest, because if we grows, so do the hype buybacks. But obviously the assistance fund it's a different beast entirely.
Yeah. Okay. Greg says in the chat, says Aero Maxi Relay is very attractive for guys like me, like to lock for forever, for a long time, let compounding do its thing. Don't want to stare at charts. I have a life. Thanks, Greg. Thanks, buddy. Does Nest have a similar relay strategy like Aero?
Yes, absolutely. And that is the Hype Engine Vault. So that is it. Yeah, you get your lock, you deposit it in there, votes for you automatically, algorithmically, collects the fees, compounds them into Nest, and you just sit there and you let the hype bonuses come in every week. Worth noting as well, people sometimes want to exit. We do have a secondary marketplace done by a third party where you can, sell your locks, and that is a trade people, have been doing as well.
Interesting. Very interesting. Very interesting. So the hype engine concept shifted from like this DAT idea to like now just paying out the yield to the lockers, basically.
Yeah, essentially that's how it stands for the moment. We spent a lot of time looking at DATs, and this was just before 1010, looking into the protocol. It was DAT summer, right? Everything was hard, and everyone was pouring a lot of money into DATs at the time. It's still a possibility, but given where the market is right now around DATs, but also the added complexity that comes with it. The mechanics are sound where you're compounding hype per share, and you can bring that programmatically on chain. I think that's a really exciting opportunity for people to participate in that. Yep. But, we decided to take things step by step, and that is get Nest to a level, right, where perhaps where it's supporting a DAT, it makes a lot of sense. Because if we're doing 50K fees a year, what's the point in having a DAT links to an exchange? So we wanted to prove that key idea that we had, that creating an incentives mechanism that is predicated through hype and capturing economic activity and giving 100% of that to users makes sense. If then, Nest is able to continue growing and would dedicate a portion of its fees into a DAT, then suddenly that becomes an interesting proposition, because if you look at Hyperion DeFi, for example, the amount of hype they have, if they're getting $5 to $10 million a year in fees, suddenly that becomes an exciting prospect for them in terms of revenue. And that's kind of how we were thinking, right? If you have an on-chain DAT that's generating $10, $20 million a year of hype in revenue, then all of a sudden you can create that sort of excitement and energy around a treasury token. So we're taking things step by step. It is perhaps a slight pivot to what we had initially imagined, but it's very much there. And I think so far, in terms of how we've been going, it could be a possibility, but we're sort of seeing how Nest does first, and then we'll move on to adding more complexity and sort of growing out the ecosystem as we go along.
It looks like the highest revenue day you had was about 136,000.
On Nest for 1 week, or
for a day?
For a day, it could be. I think one epoch we hit 460 or something like that.
Yeah.
For a week,
Interesting. So what's next for you guys? We had a question here in the chat about what you guys are focused on next.
Yeah. So I think, we've been really humbled so far to have seen this, sort of great growth. Really glad that hype bulls like us are sort of taking an interest in Nest and getting hype drops. That's what we wanted to see for the ecosystem, and seeing it grow. I think what Hype EVM has missed so far is a trading hub, liquidity infrastructure. Previously there was sort of more Uniswap type pools, which are great for spot assets. But if you're a protocol or someone who wants to build a protocol on Hyper EVM, building liquidity on a sort of Uniswap spot LP is entirely at your own cost. And Nest as an exchange, as a V33, sort of like Aerodrome, is able to incentivize that initial phase of growth where protocols need it most, and give you distribution through the exchange and build liquidity. So now we're working really hard, as we have been before, on bringing users to the chain. We have some protocols lined up to launch on Nest that have come from outside the ecosystem. I think that's what we want to see on the EVM side, is to keep growing it, and keep the the ecosystem alive. I think now Nest has the infrastructure to enable that as a liquidity hub. Then we're working on what we're calling Nest V2, which is a complete revamp of the UI. We're working with Wonderstruck Studio, who have built really great,
Very nice.
Designs for some of the leading teams in DeFi, and it's been fantastic working with them on refining the user experience. Exploring different things like treating LPing as a sort of trading experience, which I think will really resonate with users. If you're putting in an LP, right, Hype is at $60 today. I think it's going to go up, right? You set your LP from 60 to 439, and you DCA out on the way up. We're sort of taking that idea because that's what we can see most users are doing on the platform, right? They're either there to earn yield when the market's sort of a bit more stable, or they're DCAing in or out of Hype, and we're really bringing that UX, trying to change things up, because DEX UIs, they're really complicated, and you look at like 50 different liquidity pools. No one wants to look at that, and especially DeFi natives will bite the bullet because they're kind of interested in that. So we're revamping the UX completely. We're also bringing in a really interesting plugin that is centered around sort of LVR and MEV. There's a lot of arbitrage on the chain because we're so close to hypercore, right? And ultimately our LPs are sort of eating that. We have a dynamic fee system in place that spikes with volatility, but it's not very responsive. But what we've been doing is looking at where the arbitrage and the sources, where are they happening? Are people, is price discovery happening specifically on the Hype spot pair? We think so. And then it's routing through onto the EVM side. So we have a specific new dynamic fee that comes up that is able to spike a fee based on the dislocation of the price of Hype on our DEX versus what the price is on Hyperliquid. And that's through the precompiles. And you can only do that on Hyper EVM, which is a really exciting thing to do, that we can be much, much more tighter on the dislocation and therefore charge a higher fee while steering, showing that the ARB is profitable. But our sort of back testing shows that should generate roughly 20 to 50% more fees on the exchange. Of course, you have to see it live and how it actually works. But sort of in our modeling, that would be a significant boost. And, if you're an LP today on Hyper EVM, hopefully that means your life is about to get a lot better. And we have some initiatives like the sort of Nest Hatch, which is a sort of Aero style launch. Protocols can come on and distribute their token onto the exchange and really benefit from a fair launch type system. And lastly, what are we doing? I've forgotten. There's quite a few bits on. It was Hatch, the dynamic fees. Oh, and we're also looking at a very specific change to our sort of emission structure. We had the sort of traditional V33, emissions at the start and then sort of decaying over time, which is great for a bootstrap. We looked really carefully at that. Aerodrome, I think over 1 year, inflated 120%. Other sort of V33s over 1 year were more like 250, like extreme, inflation. Nest over 1 year is sort of 100%. So what that means, if you lock on day one, you're sort of roughly 50% diluted by the end of the year. So it's much more tighter. But now that we're growing and we're really expanding, I think this gives us an opportunity to tailor the emissions to the amount of fees that we're generating. And this is going to happen on the fly. So it basically allows you to save on some emissions on the way up, but also constrain things on the way down. Overall, saving supply, but there are some specific sort of really novel boost structures that are tied to fees and momentum that haven't been shown in DeFi before. So that should ensure that LPs and people on the platform are rewarded when there's high volatility, like they would be on a Uniswap style DEX. Instead of having this sort of rigid structure. So that's to come. So plenty happening, and excited for Nest V2, and we'll be sharing sort of more on that in the coming weeks.
Beautiful. Well, Telaga, man, I think the guys in the chat are pretty excited. Nest has my attention, especially 3 million market cap. Let's effing go. People are excited. Thanks for joining us, Telaga. Excited for what you guys are building, and looking forward to getting more involved, getting my dusting off the ledgers and getting back on chain here a little bit. So thanks for your time, man.
Look forward to seeing you there. Really appreciate it. Thank you, man.
All right, Telaga. Have a great weekend, man. And England tomorrow versus Panama here in New York.
Easy game. Easy game.
Easy game. 3-0, 3-0, 4-0. All right, Telaga. Peace
Appreciate
out,
it. Take care, dude. Bye-bye.
Christian says, what about spot equities on Hyperliquid? Right now, Denari has a spot SpaceX pair that is doing pretty well. I think that's interesting. But yeah, we need more spot on Hyperliquid. Right now, they're kind of losing the spot trading market to Solana and Backpack. And so we definitely want to see more of that. Thanks, Telaga. Yeah, man. I mean, that was pretty good. I think Nest could be a buy and a lock for 6 months. I mean, it just mirrors the price of hype. Let's pull up the screen here. I'll show you guys what I'm looking at. So it basically just is mirroring the price of hype. And it's a $3 million market cap, so you can't really do TA or anything. But it is down. It is down 71% from the highs. If you guys can see that there, it's down 71% from the highs. So, I mean, look at the run. I mean, it's at $3 million market cap. It's tiny. There's not a lot of liquidity. There's not a lot of trading. It's interesting. And you just get paid in hype. You hold Nest, they just pay you hype every epoch. I like it. I think I'm going to buy it and stake it and lock it and just see what happens. Small amount, I guess, in the chat, like 1 to 5K or something. Probably like 5K. Because if you think hype's going to go up and do well, this thing probably triples the performance of hype, I would say. Probably triples the performance of hype. I mean, it drastically outperformed here. The thing that sucks is that we missed that initial big pop. But I don't think it's over. Hype's breaking above. It's pushing past the resistance here at 65. Yeah, we're doing 3-minute charts on the roll-up now. What happened to us, guys? But we're going to break this level here. I don't know, man. It went from we're cooked to 3 massive wicks to the downside. We need this thing to get back up to 6. We need a daily close on hype above 66 today. 66, 67, daily close on hype would really do us well, I think. It would really set the trend back to where right now we're still just kind of fighting for our life a little bit. But, at a $60-something hype, I don't know, some chop, some push, some chop, some push, and then a big pop would be epic over the summer while everyone Like this would line up with Bitcoin not dumping, not going to zero, Clarity Act hearing on the 17th. I don't know. Obviously, this is just a squiggle on a hungover Friday, so don't take that. These are all rounding errors. These are all rounding errors. We're so early. Just back up the truck. Dude, I fucking love that, man. Let's go, man. All right, guys, we're gonna get into our daily equity segment today, as per usual on the show, powered by our friends at Dinar. And then we've got our AI Super Cycle episode next here live in the tower with Evan Fisher, a pretty prominent VC from Portal Ventures. He does a lot of work in investing. They've done a ton of investments. And the theme for that episode is going to be investing in the era of AI, what that means. What kind of sectors are the most profitable, most investable, most interesting, how to think about what happens in that world and more. So will be interesting for sure. And yeah, guys, I mean, hype's at 65. Bitcoin's holding 60. Again, we need a daily close above 60. So I'm feeling pretty good about it. Feeling pretty good. I think we're looking pretty good. We just need to get this thing above 66, I think, today. I think we need to get this above 66. So let's get into the daily equity segment here and keep the show rolling, guys. So let's hold 60. Let's hold hype at 65. And yeah, let's get into daily equity. JP Morgan lifts its S&P 500 target. JP Morgan turns more bullish on stocks to year-end target of 7,800, citing an unprecedented surge in earnings upgrades driven by AI investment and easing geopolitical tensions. This comes after Micron's beat on earnings. The bank says 2026 and 2027 earnings forecasts have risen about 10% this year. JP Morgan believes improving AI adoption and progress towards a US-Iran peace deal significantly outpace the downside risks here and suggest a more optimistic market outlook. Still warns of potential flash crashes, while critics see the late upgrade as a possible lagging signal. The bull case for the stock market now depends on AI spending translating into growth in exceptional earnings for compute, memory, and other companies. But increasingly optimistic forecasts often leave us with room for disappointment. Guys, JP Morgan's bullish on the S&P 500, and this would bode extremely well for our positions, extremely well. And so that's what we want to see. I think that this is a fair assumption, just given the price action. I don't think that they're accounting for Ben Cohen's year-end stock pullback philosophy. Midterm year, 4-year cycle stock pullback. We'll see if we can defy gravity there. JP Morgan lifts the S&P 500 target to 7,800, guys. That's our daily equity, powered by our friends at Denari, the tokenized equity platform with one-to-one real ownership of tokenized equities. Guys, we're gonna take a quick break. We're gonna get Evan up in the studio soon and get the show on the road. Happy Friday. Don't go anywhere. We just had a great conversation with the Nest folks. More to come. See you in just a second.
Deep, you know we get deep, huh? We get deep. Deep, you know we get deep. Deep, you know we get deep, huh? We get deep. Deep, you know we get deep. Deep, you know we get deep, huh? We get deep. Deep, you know we get deep. We get deep. We get deep. We get deep, huh? You know we get deep. We get deep, you know we get deep. We get deeper, we get deep, you know we get deep. get deep. You know we get deep. We get deeper. We get deep. You know we get deep. We get deeper. We get deep. You know we get deep.
Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Niro. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Niro is the blockchain for AI and the execution of AI native apps. You can check out Niro's latest AI product at niro.ai. Now sit back, relax, and enjoy the show.
Alrighty, guys, welcome back to the Tokenization Tower, episode number 39 of our AI Supercycle show, our premier weekly AI show, powered by our friends at Niro. Visit Niro.com to learn more about what they're doing in the AI sphere. I'm here with Evan Fisher on the Tokenization Tower. Evan,
Good to see you, man.
great to have you, man. Welcome to the Tower, New York City, Empire State Building. Happy Friday. It's good to be here.
This is great. I mean, so I was at Goldman out of undergrad, and so
Nice.
I can see the office all the way downtown, which is wonderful. And like, I mean, we'll get into it, but so many people have talked about how excited the suits are about crypto this week. I mean, I got lunch with the Goldman digital assets team on Tuesday, and, and the suits are exciting. So
they are. It's an institutional bull run. It's a token bear run almost. It's like a token bull, institutional bull, token bear. You are an investor at Portal, the co-founder of Portal Ventures. You guys have a massive portfolio across kind of crypto, fintech, adjacent industries. Today, I kind of wanted to have this conversation about what it means to be a venture investor, an investor in general in this world of AI. Just thinking about how it affects your theses, how it affects the way you're assessing founders, assessing industries, sectors, and more. Before we get into it, just want to give you a chance, what is Portal? What's your long-term thesis here? And just kind of give us the quick and dirty there.
Yeah, the quick and dirty. Well, so all we do is pre-seed, first check-in, blockchain investing. It's awesome to be in this office. We were the first investors in Flume.
Beautiful.
Back in 2.5 years ago at this point. I started Portal 4.5 years ago. I was at Insight Partners before that. Spent 3.5 years there. Helped invest $600 million across global fintech, internet, and software. And I was looking in 2021 at protocols. I said, wow, like everyone thinks these are just random tokens, complete speculation. And they were at the time. But I said, I think you can build interesting income statements on these things. So I wrote an article for Bankless in 2021 that was titled How MakerDAO Makes Money. And we built an income statement for it. So I built the fund on that thesis. We said, how do we invest in protocols that are just gonna be profitable and be interesting businesses? Fast forward 4.5 years, we've built a reputation as one of the best pre-seed investors in crypto. We manage 120 million across the two funds. Great mix of investors, institutionals, and large single-family offices. And we're doing more of it. We're still excited about the category.
Yeah, awesome. Yeah, man. I mean, 2021 was pre-AI. It was pre-ChatGPT. It was also pre a lot of like this like revenue fundamentals outlook that the space currently has in terms of like where we're at in that kind of view and in that sector. When you're looking now into the investing landscape, pre-seed, first check in, again, kind of like the thematic here being investing in the era of AI. We've seen different iterations of crypto companies kind of come and go. And now there's this kind of like big narrative overhang and investing overhang in the AI category over crypto. But these two are kind of coming together. And so, talk us through just like very broad, and then we'll get into some of the nuances of like, what does it mean to be a venture investor in the post-AI world? What changes do investors have to make to their theses, to their understanding of the world, to their world views, to adapt to this kind of AI first world?
Yeah, a lot changes. I think a lot of people talk about what changes. I mean, for instance, you can build code faster. A code base isn't as defensible. You can ask hard questions. You can be an expert on anything. My job is to figure out what doesn't change, frankly. And so for us, what doesn't change? Well, we think there are huge problems to solve, specifically across finance and other categories with blockchain. One of my takes is I don't think crypto is a financial technology. I think that's wrong. So huge problems to solve. And the founders that go really deep with an unfair advantage on understanding that problem, it's a unique insight. They're using an inflection point technology. That doesn't change. That's still the same. And so part of being a crypto investor and being in this AI bubble that we're in right now is we're familiar with it.
Yeah.
We've seen it before. And what it is everyone gets excited. Eventually we'll enter a trough of disillusionment. And, a lot doesn't change. And so even in the software world, I don't think that much changes. Is it easier to build companies? Yeah. But that just means it's easier to build new companies that you want to invest in. So from my perspective, it's a great time to be a venture investor. There's never been more opportunity. So what keeps us up at night, honestly, is where should we focus?
Yeah.
Because there are so many interesting theses to run at today.
Yeah. So in the crypto kind of market specifically then, when you're looking at the different sectors, the different categories, we're very much looking at revenues and monetizable moats, differentiators. Now we've kind of ran all the iterations of the different perp dexes or the different exchange or lending or whatever it is. What does the moat look like in blockchain in maybe in specific sectors or categories in this post AI world? And then what becomes far more commoditized now that intelligence becomes very, very kind of abundant? What becomes far more commoditized and what becomes more rare and differentiating that you will look for in a founder, an idea, or in a company?
There's a ton in there. So I'll try to address all of it, but let me know what I miss.
Yeah.
I think, let me think where to start on this. There are honestly so many. So what is interesting to look at today? Well, I think network effects are still interesting. I think liquidity is still an interesting moat at certain scales, of course. I think trust is an interesting moat. AI doesn't touch any of those. So, when I think about categories that are actually safe and protected from AI, blockchain and fintech are one of them, because building code faster isn't what ships a fintech or a blockchain product. It's the trust, it's the incentives. So most of what we do, we actually think is quite protected and just gets a tailwind because our founders are building faster. I was at lunch with the founder in our portfolio yesterday, and he said his CTO, over the post using Claude Code to build things, is doing 20 PRs a weekend. That's insane to think about before. And so it's just a tailwind to him. But how's he going to win? It's not going to be based off the code base. It's going to be based off the insights and the markets. We can go a ton of different places from here, so I'll pause before I give you a monologue on all those questions.
Yeah, and so liquidity, distribution, network effects, these are very powerful, non-replicatable by AI. Like dollars are not commoditizable because you can't just print more dollars. You can create more intelligence, but you can't create more money.
I could build the Bitcoin code base really quickly now, but that doesn't make it valuable like Bitcoin.
Yeah. Yeah. Interesting. Okay. So distribution, liquidity, network effects, taste, even branding, even maybe.
Yeah.
We think about this acceleration of intelligence as like, all right, we're going to see the rapid growth of and the rapid cheapening of the cost of intelligence, meaning that we can build systems and products that took much longer, much quicker, which also creates more rapid competition. Like I can spin up competitive products and protocols to things that previously took a long time or a lot of money to build much faster. We saw this with token launches and with blockchains already, right? We had back in 2020, 2019, you had to raise 10, 20, 30, 40 million dollars to launch a blockchain. And then we just had L2s and rollups as a service, which a lot of that didn't work out in the same way that people thought, but we drastically commoditized the cost to launch chains. Tokens, pump fund came along, same kind of concept. You had to raise all this money, all these exchange listings. No, just do it on chain, same. And so I'm just kind of like thinking what's coming here. Where could we see that play out again in this market where there was this big cost or big effort required? Now we have, far better engineering, far less cost, far more pace. Where do you see that like material tipping point or 0 to 1 possibility?
Yeah, it happens across the board. So it happens with some software businesses that, friends of mine invest in where, a company goes from founding to revenue to 5 million in a year's time. And like, you don't flinch at that anymore because the barrier to entry has decreased so much. In blockchain and crypto, we see so many, new trading apps and trading platforms that just get built quickly, and they give out quick incentives. They bootstrap a trader base, but it's mercenary sometimes. And so, you end up having these really fast revenue spikes, but what's it good for? So as an investor, what do we have to do? When a business, goes from 1 to 5, just like that, we sit there and we say, well, why isn't your competitor going to do that? Like, what's the unique insight?
Right.
Again. So I think what it actually creates an issue for is ZERP created so many momentum investors where they looked at the outputs and they said, that's enough to understand the inputs. They said, oh, business is doing these metrics. That's enough for me to think it's a good business. And it's going to have terminal value. And that's not the case anymore. So you just have to think like a traditional venture investor now.
Yeah.
So the boom and bust is going to be with the momentum investors.
Interesting. So then who loses in that scenario? Because sometimes when you think about who wins or how to kind of allocate for, in any scenario, any kind of path dependent scenario, sometimes it's easier just to look at who's going to lose, right? Like in this kind of tokenization boom that's happening right now, the losers are going to be the analog-esque environments that call the broker to buy the stock, the middlemen in between the owner of the stock and where the stock certificate lives when a lot of this comes on chain. Stable coins replacing remittances, Western Union, et cetera. So kind of thinking then in the lens of network effects, liquidity, distribution, taste, branding, who loses then if this is the winning characteristics of investments, whether public or private, who loses?
It is the generalized horizontal platforms are probably most at risk.
Explain that.
I was at dinner with a friend who was explaining this, and we were talking about it. And so I know how to apply it to software. We're still trying to figure out how to apply it to blockchain.
Yeah.
But let's say that you use Salesforce right now, or you use some ERP system, and it's good enough. But, he used the example, you run a liquor store. Well, there are lots of nuances to running a liquor store. You have to check IDs, you have certain licensing that you have to manage, certain inventory rules. And so it's not perfect, but you say it's good enough.
Yeah.
And so entrepreneurs are going to come along and they're going to say, oh, I could over the course of a few months, build something that's actually like an ERP system or a supply chain management system for a liquor store.
Yeah.
And in the past, you'd say the development cost of that was too great. But technology is deflationary. And so cost to produce reduced. Therefore, we can have more specific products.
Yeah.
So you can have more consumer surplus is one good thing. But I think you're just going to have a lot of smaller outcomes. So if you're a generalized platform, you need to figure out, how do I build customized solutions? All of a sudden, is it worth it?
Yeah, so then applying that framework to blockchain, there was this kind of like every app is going to have its own chain idea for a while, right? But that didn't really end up happening.
Yeah, I think that's ridiculous.
Yeah.
I
So how
mean,
do you
well,
apply-
and to be clear on that, like people, depending on people's bags, they change their mind on that every 6 to 12 months.
Yeah.
You know?
Yeah. But then how do you apply that framework then to so like the generalizable horizontal platforms or whatever that is in crypto will not be as favorable as the more specific use case specific ideas.
Well, so what's interesting is for crypto, I think it's different again because it has the benefit of network effects and liquidity.
Right.
So, where the liquor store example applies, it actually doesn't. This is back to my point of, I think crypto is quite protected from all things AI. Like I think it is a tailwind, not a headwind. It's helping teams build faster. As an investor, you have to be cautious because you see quick momentum. You say, is this durable? But I don't see it really risking market disruption. Another thing people talk about is like, are the founders, are all the founders going to AI?
Yeah.
It's like, well, you've fintech founders entering, you have people from market making firms, HFT firms entering, and you just have some people that come from financial institutions. And so they were never in the candidate list of building AI. People that are momentum have left. But it's like, I wish I could give you more. I really just think it's a tailwind.
Yeah, it's interesting. Kind of then more specifically on the convergence, right? We've seen a lot of traction around like decentralized training, decentralized inference. Obviously, like, products like Venice have done extremely well with their privacy aspect, Niro is private inference. We've seen this convergence start to happen. I know you guys are kind of more focused on the financial services, but also have done some kind of like convergence investments. If we're thinking about, so kind of like this conversation has been like investing broadly in that world, but then like, what about more nuanced in the convergence of the two worlds? Does Portal have a thesis on the value of blockchain in AI world?
Yeah, Katrina on our team wrote an article on this 3.5 years ago, I think, which was beyond hype. Here are the 4 use cases we think matter in AI times crypto.
Cool.
And if you go back on that article, it's pretty much played out that way. One of the first is, can you use incentives to, create compute, to acquire compute? And so we were an early investor in Exhibits, as an example. They started off as a decentralized GPU marketplace, have scaled massively on that thesis. Another one is sovereignty. Like that, I think is still underexplored, actually. Or excuse me, not sovereignty, provenance. And so WorldCoin's a great example of that. How do you decide what's real? But I think there's tons of opportunity there. We're investors in a business called Interval, which is using blockchain for private enterprise AI. And one of the value props is, when you throw the data on chain, you just know what's real, what's not real, compliance, so on and so forth. The other two, you have some governance dynamics, which I think are turning into harnesses. And the last one is, how do you incentivize data collection, which is absolutely playing out. So that's everything that we believed 3.5 years ago. And we've been investing along those lines. The first check into Plume, but we do a lot. We're always saying, what's the market missing that they're going to be on to in 2 to 3 years?
Right.
And so 2 to 3 years ago, FTX world, people were like, they're never, DeFi's never going to come back. It's dead. And one of our best DeFi investments ever, I wrote the check the week after FTX. I was like, this is, of course it's coming back. It's the best use case so far.
Yeah, man. It definitely, it pays to be like contrarian in that regard. When it comes to kind of thinking about, bringing these worlds together, as you're saying, obviously there's this kind of growth of AI having like this kind of tailwind, as you're saying, to all the use cases that blockchain and digital assets can serve. But one thing that I think is clear is that people are people are looking at this and wondering kind of like, when will the growth of this kind of open source, decentralized, insert whatever part of the stack here, really ever like compete with that kind of like frontier labs and the actual like model companies that are have raised billions and billions and billions of dollars. Yeah. And so my question to you is, and again, as part of this kind of like investing in the post AI world, I think we're going to get to a spot where we're going to realize that we've gone too far. We've given too much data. We've allocated too much resources. This thing is getting too fat, too good, too fast. And I'm just curious if you think that a tipping point is required for people to kind of like turn over to the more open source, decentralized iterations of kind of, some of the more closed source, centralized iterations of LLMs and AI that exists. Just like broadly, like we kind of reached that tipping point when the Bitcoin Genesis block was created, when it was like banks on the brink of bailout. 2008, it was like, holy shit, we need something different. Do you think we might get to a point like that in the AI world?
I think the consensus answer would be, the US government's going to nationalize the AI labs. It's a national security threat, and that privacy is going to be an issue. Or, Gavin Newsom's going to make it so you have to sign into your computer with an ID, and you're going to get KYC to use your computer. Honestly, I don't think that would do it. Like, I think it's either going to be a better product and people are going to use it, or it's not. And the, privacy use case, like it doesn't, there's not much track record of people making decisions for the sake of privacy.
Yeah.
Even within crypto, with people who, are very investing heavily in everything privacy related. Whenever there's something easier, cheaper, faster, better, they use the product.
Yeah.
Like humans are lazy at our core. So it needs to be better. Now, what could make it better? If regulation actually starts making these products harder to access for certain questions, or makes it harder to access the best models, such that the best models publicly are from the labs are actually weaker than some of the open source models all of a sudden, then you start to see adoption. So it still needs to be a better product.
So it's not like an ethos game or like a privacy game or a data game. It's just humans are, privacy has this kind of stated belief issue where there's like this stated belief of the desire of it, but then the actions don't always kind of show. And you're kind of saying it's just going to be a product thing.
You could run a fun game with your crypto friends and play stated versus revealed preferences on privacy and just go through their tech stack.
Yeah. Interesting. Kind of zooming out to the more like fintech, financial services investing era that you guys have really, really done a lot of deals in, and then thinking about the acceleration of these kind of more macro events. So obviously AI kind of been the topic of conversation today. A lot of these investments that you do, and I'm sure that you found this, I found this, through the investments that we've done, Plume being one of them as well, which is there's all these like path dependencies externally and internally that affect the likelihood of success of an investment. And like one of the externalities right now is we're just in this mega acceleration spending CapEx on AI. And so as it pertains to some of the financial services and fintech investments that you've done, in 2019, maybe, you couldn't have predicted that we could write into an LLM to send stablecoins globally, and it would be done in fractions of a second for fractions of the cost agentically. Yeah. But like these tailwinds have played in our favor such that AI is just fairly good at reading zeros and ones. Blockchain hashes, transaction addresses, IDs are zeros and ones, and letters and numbers. And the rise of stablecoins, obviously, kind of like probably more predictable. So like when you're looking at your portfolio of fintech companies, feel free to talk about some financial services companies. The proliferation of both AI and stablecoins simultaneously, from like a regulatory perspective and just a CapEx perspective, are like very interesting tailwinds for like this kind of path dependency in a positive way. Yeah. Talk to us about kind of what that more macro broad view is that you have for fintech and financial services, and then how that kind of dribbles down into your investing framework for some of your portfolio companies.
Yeah. I view, I'm sure Kyle will get mad at me because I'm about to do an analogy.
Yeah.
But I view blockchains as kind of the App Store moment for finance. So what does that mean? Like the App Store really created a ton of new software applications because it created global distribution. It managed a lot of your backend for you. And the result was you could have stories like WhatsApp. That was a huge story back in the day. Sub 20 person team building a platform and an application that scaled to millions, potentially even billions of users. I forget when they were acquired. So what does blockchain do? It open sources some of the hardest parts of financial services innovation. You have the custody, the distribution, the liquidity. It's all open source software now. And so you're lowering the barrier to entry for creating these new products. And that's where I think you're seeing this proliferation of teams building unique financial products. So one way that we've expressed this is we have this thesis we call latent capital markets. There are so many financial markets across the world where there is demand for products, but the demand's not met because the cost of serving it has been too high, or there's been a PR issue or regulatory. There's so many different reasons, but it's just underserved demand. And so we specifically were looking into some of the AI spend and the energy spend. Yeah. We said, wow, uranium's interesting. So we went super deep on all of these energy categories, landed on uranium, realized uranium doesn't have a spot market.
Yeah.
It's obviously a huge asset for the next coming decades, but there's no spot market. And if there's no spot market, there's no derivatives market. So there's a huge prize to be done. So we were the first check into a business called Uranium Digital. They are tokenizing uranium to create the world's first spot market for uranium.
Yeah.
Physically settled, sells through brokers. You can access it through your traditional prime brokerage platforms if you're an institution. That's possible because of blockchains.
Right.
Because a tiny team sub 10, can all of a sudden create a product that it would have taken a financial institution to actually get off the ground.
Yeah. And so, again, kind of coming back to where we started on the top here, this is like a second and third order effect of this AI CapEx boom. You get this high demand for commodities. Copper, uranium have been absolutely on a tear the last 12 to 18 months. And so then we start thinking about the financialization of these assets. Uranium not having a spot market. There's a couple ETFs you can buy right now, but they're mostly miners. There's a Tezos spot market right now on chain, but it doesn't really exist globally. And then you have the financialization of compute happening as well. There was a company that just raised from A16Z, I believe yesterday it was announced, and they're basically just all in on how do we create a basically commodities like market for compute. Doesn't really exist right now. Yeah. And so that's happening too. Yeah. And so there's always little ripple effects, but one of them is the financialization of the commodity sector that is powering this kind of AI CapEx boom.
Yeah. And if we zoom out too, some mental models I have for the space are the world is getting faster, more complex, and more AI driven. And finance and financialization is actually really valuable for that. I think financialization has gotten a horrible rep because it's just been associated with
Prediction
nihilism
markets,
and
gambling, whatever it is, nationalism. Yeah.
And it's financial markets are queryable. It's like a Nick Land idea, but it's this queryable intelligence all of a sudden. I mean, if you want to understand a belief about the world, study financial markets and understand the revealed preferences. You can ask such interesting questions. So I think financializing things is actually great. And I think as the world becomes more complex, it becomes more valuable. So that's where things like financializing compute, financializing commodity markets, financializing new credit instruments, financializing intangible assets, financializing trust, reputation, all of this, I actually think it's good because it helps us query a very complex world and understand where value sits.
Well, it's just about creating the best price discovery as well for things that people are interested in.
Yeah.
And I mean, I think the thesis here is that whether it's financializing compute, uranium, et cetera, 24/7 global market access via blockchain rails is the best way to create price discovery for global investors.
Yeah, correct. And so we spend a lot of time asking, what are other non-obvious things to financialize? We're investors in the company that's creating intervals, the company I mentioned earlier, creating a data marketplace. So how do you do secure, compliant trades of enterprise data? Really interesting. I think in the world of AI, well, if your data is public, it's obviously commoditized. Everyone's trained on it. And so what are all the foundational models trying to do? Get private data. That's where the alpha is.
Yep.
So you need infrastructure for that. So the world's going to be more financialized.
Yeah. Interesting. And so when you're thinking about like the parts of this kind of AI and finance stack, you've got kind of parts that are financialized as a result of the growth of the sector, and then you've got kind of like the actual stablecoin sending, the actual trading, or whatever it is. Where do you see, like, from the investor's perspective, right? Where do you see the, I suppose, like the value capture that will happen for fintechs, for financial service companies, for these kind of like as they collide with the agentic kind of finance flows and workflows? Where are you placing your chips for? Here's where I think these types of companies or these types of parts of this kind of broader picture are going to be the most valuable versus like the most commoditizable or kind of like basic.
Yeah. What's really interesting about financial services innovation is the innovator's dilemma is stronger than what we're used to.
Yeah.
The innovator's dilemma is the concept of the person who built the big technology in the past has so many assumptions about how they view the world. They're locked into certain worldviews because of the products they've created. The incentives make it so they're not as incentivized to innovate. And so that's what people always often said, the big companies aren't going to compete with the small companies. People like Google came along and have somewhat disproved that. Google, Amazon, like it's incredible, their ability to fight the innovator's dilemma. And a lot of crypto investors go wrong when they view crypto as software, because it's not. If you're serving financial services, point to financial services examples that have handled platform shifts well. Stripe is a new company. Robinhood is both these are relatively new companies. So I look at that and I say, well, I don't think the incumbents are going to capture this.
Yeah.
So we're, for the most part, there are rare exceptions where I think that there's actually an innovator's dilemma, where there's actually an incumbency risk. But for the most part, we think it goes to new players.
Interesting. And so is that like the banks that the incumbents, the brokerages, the traditional rails?
Yeah, it depends on the category you're looking
Right.
to. For a lot of these credit products, the banks are the incumbents. Obviously for agentic payments, and that's one where I'm curious to see how it plays out, because there is a benefit to adding the rails and owning the distribution. But there it's like the Visas and the MasterCards are.
Right. But like in that specific example, Visa, MasterCard, there's kind of conflicting views here of, they know that their card networks are not meant to support agentic micropayments at scale, but they're also going to kind of build out stablecoin rails. But then you have people arguing the credit cards are going to be better, or these card programs are better than stablecoins. That one's been kind of a big point of conflict, but I think both. Will work.
That's usually the answer.
Is it?
Financial services is the second largest TAM in the world.
Right.
There are huge outcomes. When people were looking at payments companies over the last decade in the traditional venture world, the biggest mistake people made every round was undersizing what they thought the TAM was. Because they would look at numbers and they'd say, that's insane. There's no world in which you could have that much payments volume. Because there's sticker shock to it. And that's the case when you look at tokenization. You're like, how big could tokenization get? You see numbers that start with a T.
Yeah.
You're like, no, that could never be true.
Yeah.
But it's just such a big category. So the answer is it's gonna be all of it, which is why we say sometimes people are like, oh, is crypto just finance? If so, has it compressed? Is it not interesting enough? I'm like, if that's our bear case, that's interesting. And I don't think that's true. I think crypto is like a coordination technology. Its competitor is the legal system in my mind. Not it's not a financial technology. So yeah.
All right, so just kind of zooming out here as we kind of come to a wrap in a bit, just thinking from the investor's perspective, we've seen iterations of the ramifications of this AI boom. We've seen a massive run up in memory stocks, and we've seen a massive run up in commodities. We've seen a massive run up in storage and in compute and in chip and semiconductor stocks.
Yeah.
Looking out now with where we're currently at, what is Evan Fisher's Portal Ventures view of the world of investing, either tangentially or in this kind of broad category, crypto, AI, global macro going forward? Obviously, if you didn't get into the early rounds of the big frontier labs, or if you weren't buying semiconductors or commodities over the last 18 months, you kind of feel like you've missed out. You feel like there's been a huge boom and I missed it. And honestly, I missed a lot of it. I had a good bit of gold and silver, and somehow they were kind of bucketed into that somehow. So that's nice. But I didn't get any seed checks into any frontier labs, and passed on all the SPVs because I just was like, I'm never going to get my money out of this. And looking at like semiconductor storage, et cetera, it's just been a crazy mania. Where do we go from here, from the investor who's looking at this market now, global macro wise, and wanting to allocate, Bitcoin and crypto, AI-based kind of investments, commodities? Give us like your portfolio, put your portfolio manager hat on. How do we allocate in today's world?
Well, I'll start with it's not too late to trade the memory stocks. And if you believe that, you should go on Invest Markets and trade the memory stocks. It's the only place you can do that right now. If you want me to plug more portfolio companies.
Also a portfolio company of our fund.
Wonderful.
Yeah.
So where do we go from here? Again, you have to kind of zoom out and ask the question, like, what do you believe in? I'll focus on early stage investing because like I'm a venture investor by training. So
you're thinking 10 plus years out.
Yeah.
What's the world going to look like in 10 years?
Yeah. The world is getting faster, more complex, and more AI driven. And if you think about like the coordination technologies that we have for that, it's legal technology is one of them. And so it's like our legal system is starting to be outdated in terms of the mechanisms it uses to enforce things. So think about law. What does it do? It creates trust because there's a verifiable commitment. I say I'm going to do something, it's in a contract. And then there's enforcement. So you can trust me as a counterparty. Well, if you start to think about AI and the pace at which everything's going to run, it's like, are we going to do lawsuits from AI to AI for a transaction that happened, that happens every minute? There's so many things that are going to play out that are just too fast and too complex for our existing legal infrastructure.
Yep.
So I think the most interesting blockchain applications into AI are as coordination technology. And I think people keep pointing to the payments and the finance of it, because if you compare it to a legal technology, again, what did you use legal technology for in the first place? It was like accounting ledgers. It was financial use cases were the first use case of legal technology. So that's where everyone's getting mistaken, and they're saying, oh, blockchain's a financial technology. No, it's like a legal technology where the first use case is finance, and the rest of them are going to become so obvious to the general public given AI over the next 5 to 10 years. And so that's what we're most focused on right now as an investor. I don't think other people are playing here. I think people are too focused on everything finance. So we're doing some deals there. Any founders building there? I took a pitch just before this in Williamsburg.
Nice.
That's what we're most excited about.
So focusing not on finance, not on kind of like the more financialized primitives, that's still part of the vision, the fintech and financial service, and the stable coin proliferation, and just the kind of the growth of the total global crypto, total market cap, et cetera. But it's really just this coordination focus, this next stage. It kind of reminds me of the blockchain, not Bitcoin era, right?
Exactly. And don't get me wrong, we're still doing financial investing.
Yeah.
We're in the business of saying, what are people not paying attention to?
Of course.
And so, when FTX crashed, it was DeFi. It was like when we invested in Plume, people were saying, oh, crypto's never going to be regulated in the US. Everyone's going to have to move offshore. It's going to be this renegade technology. And I was like,
yeah, sure.
That's dumb.
That's
dumb,
yeah.
It's obviously going to be regulated,
yeah.
and whoever does that first wins.
Right.
And so for us right now, the coordination stuff is just completely missed. And we think potentially a bigger opportunity than some of these finance applications.
Love it. Ladies and gentlemen, this has been Evan Fisher live from the Tokenization Tower on AI Super Cycle, episode number 39, powered by our friends at Niro, covering the investment framework and mental models for investing in a post-AI future, thinking about commodities, equities, crypto, the second and third order consequences of what is happening across financial services, fintech, and agentic finance. Evan, it's been an absolute pleasure. Thanks for coming to the tower.
Thank you.
It's been a pleasure. I'm sure you're busy. We're gonna let Evan go. We're gonna finish up here with markets, charts, news, and cover the rest of what is happening in this crazy, crazy week of a market that we've had. Guys, don't go anywhere. We'll be right back.
We get deep. You know we get deep. We get deep, huh? We get deep. You know we get deep. We get deep, huh? We get deep. You know we get deep. get deep. You know we get deep. We get deep, hot. We get deep. You know we get deep. We get deep, hot. We get deep. You know we get deep.
All right, Niro.
Andy,
Welcome to the tower, brother.
Thank you.
Niro, you have to introduce yourself. One of the longest standing roll-up team members in New York now, visiting for the World Cup.
Yeah.
Where are you from? What do you do at the roll-up? What's your experience been like?
It's been an amazing experience, life-changing. I started actually with the roll-up before it was called the roll-up.
Yeah.
It was DeFi Slate. This guy had met my brother first, and then I started working part-time with him while I was doing civil engineering work. And then it started to catch on and went through the bear with them. Yeah. And now we're here.
Now we're here. Yeah. Now we're here. It's the World Cup in New York.
Yeah.
Incredible games. Colombia doing incredibly well.
Yeah, I saw the 2 games in Mexico. Now we're here.
How was that? How was Mexico?
Amazing. Best football experience of my life.
Really?
Yeah.
Really?
Definitely.
First World Cup?
Yeah, first one.
Wow.
Hopefully not the last.
Full of Colombian fans just everywhere.
We took over Mexico, man.
Took over Mexico.
Yeah.
All right, guys. We're to you guys in the chat, Freedom Guy, Rugrat, what's going on? We're gonna look at the markets. We're gonna look at the World Cup. We're gonna start with the World Cup. We're in New York. Norway's playing France right now. Leo's gonna pull up on the screen. Niro's Leo's brother, guys. So the producer here working the screen is
Leo.
Niro's younger brother. We're gonna pull the screen up. So Norway, France is right now. France is up 2-1. Let's talk about the World Cup winner. All right. So right now, France is the highest projected to win at 21%.
Okay.
Argentina 15, Spain 13, England, Portugal, Netherlands around the 9, Brazil. Colombia is down here at 1.7%.
Yeah.
I mean that's reasonable.
Yeah.
So, what do you think? Who's our top 2 or 3? Niro's our in-house FIFA expert, so I'm gonna be placing live bets based on who he tells us to.
I mean that's the general consensus right there.
Yeah.
I mean I cannot disagree with that, but I have like this feeling that Brazil might shock everyone. I mean it's been 24 years since the last time they won it.
Yeah.
And it's the longest streak since the first time they won it.
Yeah.
They went from 1970 to 1944,
also in the US.
Really?
32 years ago. So I got the feeling that they're gonna redo the same thing.
Wow. Okay, so Brazil at 6%, guys. That pays big. Let's see. World Cup winner. $100 on Brazil. $100 on Brazil pays you $1,500. That's enough for a couple nights in New York for the boys. All right, we're gonna take Brazil, guys. I agree. I spent a lot of time in Brazil. Really enjoyed it. Vinny's on a hot streak right now, and they got Neymar back.
Yeah,
Kind of, right?
Yeah,
Is he back?
He played.
But he's not like back.
He's not at his full capacity.
Yeah. All right, we're gonna do a little $25 on Brazil to win it all, to win 400. All right, let's get into the games coming up this weekend. So we've got England, Panama. That one's hard to predict because it's just gonna be like 3-0, 4-1.
England wins. Yeah, you can bet on the spread or something like that. But
Yeah. Tonight, or Senegal, Iraq just started. Senegal's probably going to take that one.
That's
Uruguay
a
and
good one.
Spain.
You think
Uruguay could? You think they could take it?
Bro. I mean, I just saw recently that they have like internal issues, the coach and the players. So it's a
they're
tough
at
spot for them.
16%.
Yeah.
That would be a crazy win if they won.
I think they'll go for a tie.
You think a tie?
Yeah. I mean,
right.
they always, but
We're going for the tie. We're going for the tie here, guys. Uruguay and Spain. That would be crazy. Spain would be.
Yeah,
Spain would be in a bit of a rough spot.
Yeah, but Spain, I think, is already qualified.
So tell me, in this iteration of the World Cup, in the U.S. and Canada, Mexico, only 8 teams, from what I understand, 8 third-place teams in the groups make it to the knockout stage.
Yeah, it's because of the expansion.
So what are we even playing for? It's like a bunch of international friendlies. Like, what are we?
Kind of.
I mean, you know what I'm saying?
I mean, the only reason to do that is to have more games and make more money. So
I mean that's kind of.
FIFA is plenty happy with that.
Yeah, I mean, I'm gonna go for the tie.
Hey, to be fair, with the lesser-known teams, I mean, they have gotten like some pretty shocking results.
Yeah, I mean,
Spain couldn't beat Cabo Verde.
I know.
Both, and Uruguay didn't too.
I mean, I watched Ecuador beat Germany.
Yeah,
at the very
and Ecuador
end.
couldn't beat Curacao. So there you have it.
Doesn't make any sense.
That's how unpredictable it is.
Cape Verde, South Africa, New Zealand, Belgium. Actually, Cape Verde, Saudi Arabia is pretty close. It's a toss-up.
Yeah, it's a toss-up. I would say 1-0 Cabo Verde.
1-0 Cape Verde?
Yeah, because, I mean, they held up against Spain and Uruguay. You would expect them to...
Guys, we're going to come back on Monday and we're going to just go over all these picks and see what our local in-house expert here took us. We're going to go 1-0 Capo Verde.
I'm doing good in my fantasy.
There's a World Cup fantasy.
Yeah, there's a fantasy, but
nice.
I mean, let's hope that
it continues, right?
Continues,
W's in the shot.
All right, let's look at tomorrow.
Go to the big game.
What's that?
Go to the big game of the weekend.
Yeah, who's that?
Colombia and Portugal.
Colombia and Portugal, of course. So tell us about what's at stake here for this game.
I mean, the stake is to who tops the group. Like,
okay.
Yeah, I mean, Colombia has got 6 points. Portugal has got 4.
Yeah.
Portugal needs to win in order to get the first spot.
Yeah.
The main thing here is to avoid England, which is one of the possible rivals
in the first round of the knockout stage.
Exactly. Yeah.
So if Colombia wins, they won't. So the loser of this game likely plays England.
Exactly.
And the winner, who will they play?
They might play Ghana or Croatia.
Okay. Yeah, it's different.
Yeah.
Yeah. Okay. Okay. So right now, Portugal at 53%, Colombia at 24%, Thai at 25%. So the odds are in Portugal's favor here.
Yeah. I mean, definitely, Portugal is one of the favorites of the tournament. So if I go by the heart, I'll go Colombia.
Yeah,
always.
for sure.
But I think it will be like a tie. Yeah.
Okay.
Like a 1-1 or something.
And Ronaldo. He
Yeah.
scored one goal, I think.
Two. I think
two
it was
goals.
2. Yeah. 2 goals.
But people were saying that Mbappe, Messi.
Yeah, it's like
and he's not.
They were having a party and Ronaldo wasn't invited. But he got to the party later, scoring against Uzbekistan. Yeah.
He got 2 goals.
He got 2 goals. Yeah. Yeah, there was Vini scoring and
Messi
scoring
and
and
Mbappe.
Like, everybody was like, where's Ronaldo? And
So I went to the Norway game and Holland scored 2 goals. Man, watching Holland in person, never seen anything like it, bro.
Bro, he's a freak, right?
Dude, it was just like, the goalie gets the ball. And I've never seen a guy. It's like a cheetah. It's like a cheetah that's like watching like a wildebeest run, and it's just like bang.
Yeah, it's amazing the speed that he has for his size, right?
Yeah, he's like 6'3", big shoulders, like.
Yeah.
So.
That must have been something, definitely. Yeah. Haaland is like one of those guys that is supposed to take the throne of Ronaldo, Messi, like.
Yeah. And what is he? 20? 21?
No, he's 23, 24, I think.
23, 24 now.
Yeah.
But he started when he was like 19.
Yeah. He started breaking records from as a teenager. Yeah.
Yeah. All right, guys, coming into the markets here. Hype holding up 65. Looks pretty good. Bitcoin just trying its best to hold 60K. I mean, it's doing everything it can.
Yeah.
I mean, for us, it's like we wanna buy cheap Bitcoin. Like in the 30s, 40s would be insane. But man, it would be not great for the roll up here.
Bro.
Another bear market for the boys.
No. Not like the one from 2022. No. We don't want to go back there.
Yeah, this one's been better. This has been better.
Definitely.
So, Bitcoin's holding up, guys. Again, I think we're looking to hold the line here. We want to see hype close the daily above 66. So we really want to see a breakout here. We want to see Bitcoin close this daily above 60. And then, that's it, man. You got stocks, holding up. Bunch of other coins kind of just barely holding up. Solana up a little bit today.
What's Solana?
73.
It's actually good compared to Bitcoin.
I know, right? It's holding up good today. So yeah, man. So New York for the weekend.
Yeah. I'm looking forward to what you're going to show me.
I don't think he wants to know, guys. Guys, as always, it's been an amazing show. W's in the chat. Guys, thank you for being a part of it. Happy Friday. Niro, one of the longest standing players, team members, hardest working folks, does incredible work. Been absolutely crushing. Freedom Guy says, I like teams with good young goalies that can catch fire in the tournament. Ask what teams fit that description other than Holland.
Okay.
Teams with good young goalies that can catch fire.
Catch fire.
Like young goalies that are kind of underrepresented.
I would say, like Spain, but I don't think that goalie that's been like on the ascent lately. I don't think he's starting.
Yeah.
I haven't been able to catch like all the games, so I really wouldn't know.
All good. We're going to go with Holland then.
Yeah.
Guys, thanks for being on the show. You know where to find us, Bear or Bull. We're going to be here. We're going to be here tomorrow. Well, not tomorrow, but Monday, 12:30 p.m. Eastern, live from the financial cap of the world, Tokenization Tower, the Nest. We're here. The markets are down and up. We still think that was the sweep. And then we go from here. So close us out, Niro.
It is great to be here on the Tokenization Tower.
Yeah.
Just enjoy the World Cup and look at the markets afterwards. Don't worry about that now.
There you go. Guys, happy weekend. Have a great weekend. W's in the chat. Have a great weekend. Rugrat, Freedom Guy, NOC, Cross Central, Edward, all you guys. We'll check on the positions on Monday. Greg, everyone else, Christian. Guys, thanks for being part of the show. See you guys later.